Up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. European futures are set to claw back some of yesterday's losses after a late reversal on Wall Street. Brent holds above $100, and the Fed sticks to its resolve to raise rates next month. Well, a few seconds ago until markets open, here where your futures stand, indicating a higher open, up 1% plus across the board. That was after that huge reversal in U.S. markets yesterday. It's either a case of selling the rumor, buying the news, or some disappointment that sanctions were not as strict as some had expected, or perhaps a combination of the both. So markets just opening up now here on Europe. FTSE 100 first out the gate, little changed. It was one of the most hurt yesterday, and more than 2 standard deviation move to the downside for the FTSE 100 yesterday. It is up only 0.5%. Recall yesterday on Wall Street, gains exceeded 2%. So it's still clear that some of that geopolitical risk priced more into Europe than it is in terms of the U.S. and the economic consequences of escalation in Ukraine, of war, of higher commodity prices, of higher energy prices. We are seeing some of the commodities come off a bit. We're also getting France opening up now. That is up 0.8%. Spain up 0.5%. That just opening up out of the gate. We're also looking at a reversal in some of these currencies. You're seeing green across the board. The dollar was stronger yesterday in that bid to havens. Again, some of that's coming off, so we are seeing, for the most part at the moment, risk markets like equities outperforming. Let's switch up the boards and get your view cross asset. So European opening up to the upside, but we are seeing a little bit of weakness when it comes to NASDAQ 100 futures, down almost 1% on the lows for the morning for the futures session. Again, huge gains yesterday. We did see flows into the triple Qs, that's the NASDAQ 100 ETF, perhaps some dip buying, some opportunity there in terms of times of turmoil, using that as a chance to be active in your trading strategy. We are looking at the euro come back from yesterday. However, there are questions whether the ECB will be able to tighten conditions this year given the threat of conflict in Ukraine. We are seeing some bond buying still. That hasn't reversed. We're looking yields lower by about 2 basis points in the U.S. today. Brent crude still above $100. 2.5%, just thereabout gain so far this morning. So while crude is continuing its march upward, let's look at natural gas, because that is coming off the highs. That is lower by about 16%. This is Dutch front month futures. Now, Europe is still buying gas from Russia. Because of that, some of these natural gas worries perhaps are coming back. It wasn't part of the sanctions package unleashed by the U.S. and Europe. Wheat also dropping ever so slightly. That's down 0.1% after a historic rally. Russian stocks, after falling 33% today, are up 23% today. That trims the 2-day loss to about 18% drop. Ruble, though, still suffering losses, down 0.8%. So it's a lot of digestion, a lot of divergence when it comes, a little bit of a messy session, no real clear narrative coming out. But let's get more on that top story, because it really dictates all of these market moves. And President Biden has imposed tough new sanctions on Russia, with Western nations warning that Ukraine's capital, Kyiv, could fall.
We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
We will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine.
We took a political decision to add an additional package of mass sanctions, which will be painful for the Russian regime.
We will never tolerate any attempt to change the status quo by force. We will tighten our sanctions and stand in solidarity with the international communities.
There was certainly duplicity. A choice, a deliberate choice, was taken consciously by President Putin to launch a war.
We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week.
Now we have to meet the moment. We will hold the Kremlin accountable.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
Let's get to our reporters. We're tracking every angle of this story. In Moscow, we have the latest with Henry Meyer. In Brussels, for the sanctions response is Aggie Cantrell. Outside of Downing Street is Lizzie Burden. And of course, here alongside me in London, tracking all of the market reaction is Christine Aquino. Henry, let's kick things off with you. On the ground, what does the latest look like in terms of the invasion?
Right, well, we're in day 2 of this massive offensive. And the first day, what Russia did is it entered Ukraine from 3 directions. It started with a massive assault barrage of missiles, aircraft fire, and artillery fire, which wiped out Ukraine's entire air defense capability. And then the ground invasion started. Day 2, we're seeing intense fighting around the city of Kiev, the capital. So at the moment, Kiev is basically encircled. Ukrainian President Volodymyr Zelensky is vowing to fight on. And Russia is clearly, its intention is to try and bring this to a close as quickly as possible. But the risk is of very big civilian casualties.
Aggie, let me bring you into this. Yesterday, in response to what we saw on the ground that Henry's talking about, the EU holds an emergency summit, unleashes new sanctions. What did we learn in terms of the European response?
I think something that was really telling about the European response is how von der Leyen characterized it as a watershed moment. This is a moment where the European Union is having to respond in a much tougher way than it has done so in the past against Russia. And it's important to note that now, under these new sanctions, 70% of Russia's banking market will be affected by these sanctions, and they will be limited in their access to things like semiconductors and other crucial technologies for Russia's modernization. They're really pushing this narrative that they need to also push for a decoupling from the Russian energy market in the long term. They're not just looking at the sanctions that they're putting in now, they're also saying that years down the line, they need to be separating themselves from the Russian economy and especially the Russian energy market.
Of course, as you say, it stopped short of a full-on stopping of flow of Russia gas to Europe. Also, SWIFT wasn't taken away off the table either. Lizzie, that's something that Boris Johnson had floated as a possibility. What steps has the UK taken? And what do we know about the possibility of that being enough to deter Putin?
Well, Danny, the Ukrainian flags flying over Downing Street this morning, but apart from the outward show of solidarity, the UK's first set of sanctions were described as meaningless by the opposition Labour Party, but also by some of Johnson's own MPs and city executives. So he's gone further, and the government's announced what it says is the harshest set of sanctions Britain's ever imposed, including an asset freeze on all major Russian banks. As you say, Johnson wants to go further. He wants to ban Russian access to SWIFT, but that would require international cooperation. Germany isn't playing ball at the moment. And the bottom line is, all of these measures could backfire to some extent because of how closely the city has courted Russian wealth in the decades since the end of the Cold War.
All right, Lizzie, thank you so much. That's our Lizzie Burden in Downing Street. And of course, thank you as well to Henry Meyer in Moscow and Aggie Cantrell in Brussels, giving us the full view of Europe and UK's response to the latest in Russia. Now let's get to the markets. Christine Aquino is still with us here in the studio. So Lizzie was just talking there about how it wasn't perhaps the full force of sanctions possible. We see markets turn around. Is that really the cause for the market's turnaround? And if so, what's the staying power of this current rally?
Well, Danny, it's not looking very sustainable at all. Sentiment longer term is very much in the back foot, despite the fact that we're seeing this bit of a rally here on a Friday. But remember, yesterday's declines were incredible and very broad spread. And, you know, a rally such as today's really feels more like a bit of a dead cat bounce rather than a sustainable relief rally. And again, I think it may have just been a reaction to, I guess, a lack of escalation in the sanctions thus far. So a terrible situation that's already underground, perhaps not escalating as much, which is calming markets a little bit. But longer term sentiment still very much in the back foot. This morning we have, for instance, Goldman cutting its European equity targets primarily because of the Russia risk that it expects to hang over markets longer term.
That is this question, right? If this is incremental sanctions, what's next? And given that posturing, where in markets is the most vulnerable? Should we get more sanctions? Where do we look out to say, okay, this is a place that investors will likely back off of?
Yeah, well, Russian bonds very much in the limelight at the moment, of course, because, you know, that has been the target of several sanctions in the past, though they have been quite limited. And so now investors very much watching whether there's scope to broaden those sanctions and really target and get aggressively at Russia's ability to tap international bond markets. And of course, we're seeing that impact and anticipation already reverberating in the bond market specifically. An index, for instance, by JP Morgan tracking Russian debt showing that it lost 50% of its value. It halved in February as a result of what we've been seeing here.
Christine, we also, just about 10 minutes ago, got France inflation figures for February, 4.1%, above the estimate of 3.7%. As we contemplate where inflation goes next, considering wheat prices, considering gas prices, is stagflation the new worry for markets?
It certainly is getting traction, Danny, for sure. We've seen a number of mentions in analyst notes and investors citing this as kind of the new fear that's emerging as a result of all the geopolitical tensions, but also the impact on commodity prices. I mean, we crossed $100 for Brent this week, and that is very much playing into inflation expectations. We've seen various market-based gauges in the US, in the UK, in Germany, reaching multi-month, multi-year highs. And I think that is very much capturing the anxiety in markets over inflation, because now the oil price is adding to an already upward trajectory for prices as a whole.
Right, really exacerbating anxiety, really the perfect word, Christine. Thank you so much. That's our Christine Aquino, markets editor in London. Now, coming up, we're going to continue this conversation of how investors should be positioned during the Ukraine crisis. We're going to speak to BlackRock's head of investment strategy for iShares EMEA. All those answers next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open. We're about 15 minutes into the European trading day. Bounce back, not as strong as we saw in the U.S., but still these gauges, the Stock 600 up 0.7%. Russia is up 24% so far this morning. Of course, yesterday declining by about 33%, but still paring some of its losses. Now, investors are seeing the big jump in market volatility, at least some of them are, as a buying opportunity. But central bankers and others see a rise in risk that investors and consumers need to brace for. Here's what some of those voices have been telling Bloomberg.
What we've seen in this escalation is just a rise in uncertainty, and that means a rise in risk premium.
If a full-scale war breaks out, there would be a big shock. It would likely have a big impact on inflation.
Now we have this invasion. That's not going to help consumer confidence.
The markets are now really pricing quite a big slowdown, and positioning has become quite negative.
And these one-off upward price pressures really add to the risk of inflation expectations getting away.
I think China is going to be a safe haven.
I'm not sure this completely takes the Fed off the table.
Barring an unexpected turn in the economy, I believe it will be appropriate to move the funds rate up in March.
It's timely for us to normalize policy.
A strong case can be made for a 50 basis point hike in March.
Policy is really poised to return to a more normalized stance.
We're going to have to see whether this Ukrainian situation changes that narrative. And I just think time will tell.
The cumulative amount of rate hikes in this cycle should and will be, in our view, a lot more muted.
They're going to throw the ball straight down the middle and try to avoid surprises.
So how should investors be positioning? With us now is Kareem Sheedid, BlackRock's head of investment strategy for iShares EMEA. Kareem, before we get into what we do from here, I want to reflect back on the past 24 hours, looking in what your clients at BlackRock did in terms of ETF trading. Just how active were they in yesterday's session?
Thanks. Yeah, I mean, it was a very active day. When we look at the market trading yesterday, we hit some record levels in terms of trading volumes in the ETF business. It was the second, for EMEA at least, it was the second highest trading volumes that we've recorded. And it's really been across multiple exposures, but especially in equities, especially in exposures across banks, also, some commodity themes coming up, which is not hugely surprising given the moves that we've seen in the underlying market. Gold as well has been very much in focus, and I'll get to that in a bit about how we're seeing that positioning continue.
Well, this is one of the questions, right? You have your outlook before yesterday, before the tensions really even began of markets, where they would go. When a day like yesterday occurs and we watch how it unfolds, to what extent do you have to completely rip up the playbook now that the tail risk has become the base case?
That's a great question. I think if we focus on the key implication from all the market volatility that we've been seeing and the economic outlook, it all comes back to one thing, which is inflation. Already we started the year having reduced our risk to 2022 outlook. And looking back, that was the prudent thing to do, given the volatility, given the central bank confusion that we are seeing year to date. But then as we look forward, this inflation picture is really important. We knew that inflation is already coming in quite strongly. What we're seeing right now is that the peak of this inflation picture is probably going to be a little bit later than we had initially thought, and a little bit higher. So slightly later peak, slightly higher peak, doesn't really rip up the economic outlook that we had in mind, but just sends it in the same direction that we thought, just a little bit more. And so as we think about that inflation picture, it's important to highlight, for example, from markets, that the pricing of central bank hikes for this year hasn't moved significantly. We're already looking at, we're still looking at more than 6 hikes priced in by markets for the Fed this year. So there hasn't been that significant unwind on the rate side.
We have heard, though, from the likes of Goldman, for example, a change in strategy when it comes to approaching Europe. They've downgraded their Europe outlook. Kareem, let me read to you what Sharon Bell wrote over at Goldman, saying that in light of the conflict, the rise in risk aversion, some of which will likely linger, and the impact on the growth inflation mix, we take down our target prices. Now, you're talking about just a pushing further out of that peak in inflation. Is this the wrong move, then, to downgrade your European outlook?
I think when we look at our tactical views, we've actually not changed them. We have, and we were talking about this earlier, we have seen some clients looking to buy the dip on the volatility. We, however, have held off changing any tactical views for now. When looking at Europe, there are some challenges ahead. For Europe, of course, we saw the wild swings in the European natural gas prices yesterday. That does have some implications for inflation, and the jury's still out on exactly how that looks like. But when we think about where we position in these environments, quality stocks do look better positioned in the context of higher input costs and more resilient balance sheets and more resilient margins. And with that, the U.S. does have more quality tilt. That's pretty clear.
So stick with quality. You mentioned your clients, some of them happy to go ahead and buy the dip. I look at today, Russia stocks up some 20%. What does appetite look like to buy Russia assets after yesterday's very steep fall?
Of course, you know, in the emerging market space, Russian assets have been hit the hardest in this. When we look at EM, we're actually looking at getting more selective on a regional basis, focusing on regions that are perhaps getting punished by the volatility, even though they're a bit further away from this. So when we look at Latin America, for instance, we have some significant commodity exporters in that space, and we see them better positions in the context of having been punished in a broader risk off.
All right, Kareem, really great to have you on this morning. We appreciate your time. Kareem Shadid, BlackRock's head of investment strategy for iShares EMEA, working through with us the very volatile past 24 hours and what's to come. Speaking of which, coming up, we're going to have more on how markets are reacting to the deepening Russia-Ukraine conflict. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Welcome back to The Open. We're about 25 minutes into the European trading day after yesterday's steep losses in Europe, staging a rebound as investors take stock of where sanctions sit and perhaps look at opportunities to get active in this market. Our last guest saying the second busiest day in terms of ETF trading for BlackRock on record. We also are seeing Russian stocks gain some 19% off the highs for the morning, but of course that is after yesterday's 30% plus fall. Now let's get over to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Danny. Western allies see Kiev poised to fall to Russian forces soon. That's as fighting continued after President Joe Biden announced additional sanctions on Russia and said Europe is facing a dangerous moment. Russian troops attacked Ukraine from the north, south, and east, and Ukrainian President Volodymyr Zelensky's defense chief predicted a new wave of attacks. President Biden has imposed more sanctions on Russia with the aim of imposing a severe economic cost. Speaking from the White House, the president laid out penalties, including blocking major Russian banks and cutting the country off from chips and advanced technology. However, Biden is not barring Russia from the SWIFT international banking network for now. ECB policymakers are signaling that the exit from stimulus may be delayed but not stopped this year, given the conflict in Ukraine. Austrian Central Bank Governor Robert Holzmann told Bloomberg that Russia's invasion does not fundamentally change the outlook for the Eurozone economy, though it may slow the unwind from ultra-loose policy. His view was echoed by officials from at least 2 other central banks. The Federal Reserve still looks set to raise rates next month, despite uncertainty posed to the global economy by Russia's invasion of Ukraine. Officials, including Cleveland President Loretta Mester and Atlanta's Raphael Bostic, are stressing the need to confront inflationary pressures. Meanwhile, Governor Christopher Waller says a half-point move higher could be justified next month if economic data keeps coming in hot. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Laura, thanks so much. Laura Wright here in London. I also just want to point out ruble turning positive for today's session after yesterday's steep losses. And coming up, we're going to have more analysis of the risks surrounding the Ukraine crisis. We're going to speak to Olivia Poggi, head of political risk and partner at GPW. All of that is next. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open. We're 30 minutes into the European trading day. Here are your top stories. Russia's war against Ukraine intensifies. Rockets strike Kyiv with officials warning the capital could fall. The U.S. and its allies ramp up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. Russian stocks claw back some yesterday's losses after a late reversal on Wall Street. Brent holds above $100, and the Fed sticks to its resolve to raise rates next month. So we are looking at a European equity session that is pushing higher. It is less than we saw in the U.S. yesterday. U.S. stocks moving higher by more than 3% in the case of technology. It was a monumental turnaround with U.S. tech yesterday opening into a bear market and then staging that rebound. The rebound isn't as strong here in Europe. You look at a DAX that's only up 0.5% with that heavy exposure to Eastern Europe and Russia for the DAX. That's underperforming, shows that not all of the rebound is about taking out the geopolitical risk. How much of this is about finding opportunity, about being active? Yesterday, it was about perhaps exercising some of your tail risk hedges. Today, is it about taking stock, or is it about evaluating sanctions that weren't as strict? You're looking at a FTSE 100 outperforming, up 1.4%. So there are your regional benchmarks. Let's take a look at what sectors are on the move. GRR Go on your terminal. At the top, part of the reason that London is the outperformer, basic resources at the top of the pile, up 1.8%. We continue to see sky-high commodity prices, risks of that stopping a flow of trade from Russia, the breadbasket of Europe in Ukraine, pushing all the commodities higher basically yesterday. Travel and leisure also up higher. A lot of these risky sectors that perhaps sold off yesterday in the green today. The one laggard, chemicals at the bottom there, down 0.8%. Now, in terms of some of the assets most affected by Russia, some of those are turning around. So yesterday, Dutch front month futures in the past 5 days has staged its biggest rally since at least 2005. Today, they are falling about 21%. The flow of gas is still occurring from Russia through Ukrainian pipelines into the rest of Europe. Sanctions weren't placed on that specific part of the market. So perhaps some relief, some moving down of that price. Still looking at wheat moving down as well, 1.4%. And Russia up 18%. And the ruble, just in the past 30 minutes, flipping to gains. It's red there because it's versus the dollar. So the dollar falling 0.9% versus the ruble at 83.4 per US dollar. Now, let's get to some of the international reaction to Russia's invasion of Ukraine and look at how some of the major newspapers are covering the war. The Daily Telegraph leads with new Cold War as Putin strikes. The Times, a dark day for Europe. And Putin invades is on the front page of The Guardian. The Liberation in France says unthinkable. And finally, Russia's largest independent newspaper published this edition in Ukraine as a show of solidarity against Putin's invasion. You see there the colors of the Ukrainian flag. Well, joining us now is Olivia Poggi, Head of Political Risk and Partner at GPW. Olivia, thank you so much for joining us. It was a fast-paced, moving 24 hours. If I could first get your reflection on what we saw yesterday, how did you characterize, or would you characterize, the pace of how things moved in Ukraine?
Yeah, good morning. I mean, there was a clear 360-degree turn and shift in Putin's strategy. I mean, it's very difficult to know if it was all premeditated or if it's simply that he found that Western diplomacy wasn't really going to be an option for him. Certainly, the real turning point was at the national security meeting that he held in the Kremlin, where it was very clear what his view was on Ukraine, that Ukraine really belonged fundamentally to Russia, and that he was not going to let go or entertain the idea of any form of negotiations. At this point, it's very clear that Russia is not a reliable partner in the international order, and that it simply doesn't care about any form of repercussions, whether that's sanctions or being cut off from the international economy at this point.
Olivia, does that mean that sanctions won't have an impact in terms of stopping Putin from moving further?
Putin has certainly shown that he does not care about sanctions and that it's not going to be a tool that is going to deter him. He has been very effective over really since 2014, since the annexation of Crimea, of buffering the Russian economy, de-dollarizing it, not having much international debt, and really so that sanctions would have a much more limited impact on him. He also is very aware that it is very difficult to roll out an international sanctions package against Russia that also does not hurt Western and international commercial interests. So he is playing on that. And as, for instance, we have not seen yet Russia being cut out from SWIFT simply because the implications for the West would be too great.
It is this question that people have brought up again and again. Why not use SWIFT as a tool? Why not cut off gas exposure as well? Javier Blas over at our opinion team talked about how Saudi Arabia was able to get some control over Russia when they encountered this issue with gas output with OPEC+. Now, Javier Blas has said that the West is actually financing Putin's war in Ukraine, buying hundreds of millions of dollars worth of Russian natural resources either day. He says either stop buying them or find a way to stop the payments, that's the only thing that could shock and awe Putin, perhaps, to stop him. I mean, does Europe have the stomach to do something like that?
I mean, I think it's very, also from an infrastructure point, it's very difficult, right? The gas is piped into Germany and to Italy. Germany and Italy are the two countries that are most vulnerable to Russian energy prices, with Germany getting approximately 35%, same with Italy. UK has done a better job at diversifying its gas sources, and we see the US is also in the midst of negotiating deals with Qatar and other countries in order to hedge itself against Russian oil and gas. But simply, it's not something that can be done overnight. And these are long-term contracts that are in place in which a lot of European industry is entirely dependent on. There are reports of Italian lorry drivers on strike right now simply because they cannot afford the price of petrol. There are, all sorts of Italian industry is complaining that they're going to go bankrupt if we cannot get energy prices under control.
Olivia, given that your clients are multinational, for those who have exposure in this region, what is their number one concern currently?
Well, since right now we're basically in a full-blown attack and war, I think we can call it that. So our clients are very concerned with very primary issues such as safety of staff, getting them out of Ukraine, making sure that their infrastructure is going to be safe. But they're also really planning questions about how, what's going to happen to their servers. How will they make payments in country? How will they even get their money out? And what we've seen is that Putin is being ruthless, very ruthless at the moment, whether there'll be major countermeasures taken across against Western companies, such as closing them down or kicking them out of the country even. So really, they're worried about a whole range of issues right now, from the basic safety to whether they will be able to survive in that region going forward.
Can we dig into that a little bit in terms of what Putin's response will be? Because he has said himself that the West will face serious consequences for the sanctions. What is your base case, especially for those companies you deal with, what that could actually look like?
What we've seen in the past is what we've seen with some major U.S. investors. They will be subject to fines. They will be subject to they could be subject to corporate rating. A lot of the tech companies operate in Russia, and what we see is that they're forced to put their data on Russian servers, which obviously makes it unable for them to operate because they cannot be giving away client data to the Russian government. The countermeasures can come in a whole range of forms, but really what it is that the government can make it very difficult for businesses to actually operate on a day-to-day basis. Worst case scenario, you can have arrests of high-level executives as well, which is something we have seen in the past.
How does one, though, deal with protecting themselves against not just that immediate present issue, but the second order effects of the economic consequences, high food, high gas prices? What does the playbook look like there?
I think it's very early to tell. Some businesses are going to have to start thinking about what does payments look like for their staff? What role should they take in protecting their local staff? This is a huge question that they have, not just for their foreign staff abroad, but also what kinds of measures should they take place, let's say, for Ukrainians working for them? Do they have a duty of care to protect them? Do they have a duty of care to make sure that they can reach increased salaries and so forth? And this is something that a lot of businesses are grappling with at the moment as well.
Olivia, really appreciate your time this morning. A very timely conversation. Olivia Poggi, Head of Global Risk and Partner at GPW. Now, coming up, we're going to speak with the CEO of Swiss Re about their earnings and, of course, risk from the conflict in Ukraine. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open. We're just about 43 minutes into the European trading day. It is a tail risk that has become the base case, but after yesterday's losses, we're looking at a rally across Europe, the strongest of which coming from Russia stocks, which are up more than 20% elsewhere. FTSE 100 led by materials up 1.2%. Now let's dig into some individual stories, and Swiss Re shares are trading lower after the reinsurer reported net income for the full year that missed estimates. The company's CFO said earlier on a call this morning that he sees material losses in Ukraine, but it's still too early to see which are covered by insurance. And Swiss Re CEO Christian Mumenthaler joins us now. Christian, thanks so much for your time this morning. Let's start with the Ukraine risk. We will get to your numbers, I promise. Your CFO, as I mentioned, talked about your exposure in Russia, but could you quantify for us what exactly your risk profile looks like in terms of Ukraine and Russia exposure?
Yeah, thank you very much. I think when the CFO said that, he was asked about the overall industry exposure in this extremely concerning situation. Swiss Re itself, we don't have legal entities there, we don't have staff there. The overall premium is quite small in that region. The assets exposure is very small. So the losses will come through secondary or tertiary effect, coming through sanctions, coming through the economy, coming through the capital markets, because we have 100 billion of assets under management. So this is really where we see the potential outcomes, but it's very hard to judge because it will depend on the situation on the ground and then the sanctions and the developments over the next few weeks.
It is difficult because, as you say, there's second order effects. So what have the past 24 hours looked like for you? I know you were busy, obviously, preparing for today in earnings, but is this a day that you gather the team and say, okay, what are our exposures? Where can we cut back on?
Yeah, I have to say, unfortunately, because of Corona, we're quite crisis-prone. So we have standing teams, an emergency to look at all kinds of aspects, including, our own staff, because we have Ukrainians everywhere in our company, also not in the Ukraine, but in other places. So what can we do? What is the situation? So yes, we monitoring the situation like everybody else, and try to find out or try to war game where this could all end up with. But it's very difficult, I think, at this point in time.
How are you then approaching this indirect effect of higher energy costs, inflation, and economic impact?
Yeah, I have to say that my asset management, my CIO had told me a week ago that their scenario is we will see this Russian invasion into Ukraine. So they positioned everything they could accordingly. Now it's going to be a question of monitoring the markets and see every development, try to anticipate what's going to happen. And again, really very difficult to foresee the next few days. So we have to be super alert.
Well, let's talk more about the long term then, Christian, and things that we perhaps can anticipate a little bit more for. You've set new financial targets through 2024. In a post-COVID world, from which business do you see the greatest strength coming from?
Yeah, so the P&C environment is extremely favorable right now. We're probably in the best phase of the market since 8 years. And so we see the results come through. We have very good results actually in P&C last year. We can see further pressure on prices coming through over the next few years. So we decided to adapt the ROE target to 14% by 2024, coming from a target that certainly didn't look very ambitious in the current environment. So it's really P&C. And then on the life and health side, the fundamental underlying business is doing really well. It's just that COVID has been a big toll and a big surprise in Q3, Q4 in terms of the impact it had on the US population in particular. But we foresee that we will reach the endemic stage also in the US, as we now currently see in Europe, where you see a rapid fall of number of deaths, and it seems to become more like a normal illness you would have. And I think that's what was foreseen also 2 years ago, but we're finally reaching that stage.
But would you say we're reaching that stage now, or is this something you see in quarters to come, Christian?
No, I think in Europe, we're in the midst of it. So here in Switzerland, for example, all measures have been lifted because while there is Omicron wave, there's just no significant impact on hospitals anymore. So through vaccination and the number of infections we had, the population can basically live with COVID long term. So the hope is obviously that the US will reach that within 1 or 2 quarters, say, same stage. And then, it's just going to be integrated basically into humanity for the next few hundred years, but not something of concern.
So until we reach that stage, given the surprise of the impact in the fourth quarter, are you bracing for a bigger impact in the first quarter than you had originally anticipated? Again, until we get to that endemic stage in the U.S.
Yeah, so the third and fourth quarter was still Delta variant. It was very hefty, and I think the big surprise is it really hit also the younger ages in the US, so 15 to 65 working age population. We saw excess mortality compared to norm of about 60%, which is an enormous tragedy, and not something we've seen actually here in Europe. So there must be other factors in the US that make it worse. Now we're more in the Omicron phase, and you could see in the US the number of new infections going down rapidly, the entry in hospitals going down rapidly. We haven't seen yet the drop in number of deaths, so definitely think Q1 will still be impacted. But hopefully, if we just use the curves we see in Europe and what we see here in the US, we would foresee that the US also will enter endemic stage. So in our goals for 2022, we said in Life and Health we expect a result of 300 billion net income, and that includes approximately 600 billion charge for COVID. Obviously, there's a high uncertainty around that figure, but that assumes that the US over time follows the Europe.
Yeah, I think that is a hope many, if not all, people share. Christian, thank you so much for joining us. That's Christian Mumenthaler, Swiss Re CEO. Now, coming up, China's refusing to condemn Russia's attack on Ukraine, but Vladimir Putin's military gamble could stretch the friendship between Beijing and Moscow. We're going to discuss that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open. We're about 52 minutes into the European trading day, and it is a rebound in many of the risk assets. We looked at a huge rally yesterday to end the day on Wall Street. Well, that's being reflected somewhat less, but still a turnaround in equity indexes in Europe. Your Russia MOEX index up 12% off the highs for the morning, at one point up more than 20%. So still suffering losses in the past 2 days after the biggest drop on record yesterday. You're looking at strength when it comes to the yen. the dollar. So it's a little bit of a mixed picture here. So you have some haven buying when it comes to the yen, but some of those commodity currencies doing better. In the ruble, also up 0.6% again after yesterday's steep decline, but still selling off in terms of Russian assets. Bonds are selling off. We're also looking at natural gas coming off of its highs from yesterday after seeing its biggest 5-day rally since at least 2005. Russia gas is still flowing to the rest of Europe. Sanctions not as strong there, allowing those prices to come down just a touch. Now, China has refused to condemn Russia's invasion of Ukraine, urging restraint by all parties and deflecting blame onto Ukraine. The financial support of Beijing's banks for Moscow could be influential in shaping the direction of conflict. Joining us now is John Liu, Bloomberg's managing editor for China. John, so how might exactly China help soften the blow of economic sanctions against Russia?
Well, the Chinese could continue to buy Russian oil and Russian gas. That will be an important market if especially the Europeans and the Americans cut that off. And obviously financing for various Russian projects for the economy at large from Chinese banks will be increasingly important as sanctions come in from the U.S. And Europe. But also sort of diplomatically, as you mentioned, China has refused to condemn the offensive so far. They've tried to say that the sanctions that have been put in place, that's not helping the situation. They've also called for Europe and the U.S. to address Russia's security concerns. But at the same time, I think there is a fair amount of discomfort in Beijing for what is happening in the Ukraine at the moment.
So what would be that calculus then to refuse to condemn, as you say, Russia's invasion?
So I think China wants to, on one hand, show support for Russia because it is an important ally vis-a-vis the U.S. It's a source of energy. But also, China has lots of territorial issues itself, be it Taiwan, be it Hong Kong. And its stance has always been that its territorial integrity should not be infringed by other countries. And so watching this offensive in the Ukraine by the Russians undermines that. And so China's trying to walk this fine line of not undermining its own arguments.
Is there that risk that the Ukraine crisis could spill over to Asia in having Taiwan fall vulnerable?
I think as far as we can tell, there is no move by the Chinese right now to take any action on Taiwan. I think very importantly, this is a political year in China. Xi Jinping is looking to get a precedent-breaking third term at the end of this year. The Taiwanese, as we've reported, they believe Xi is so focused domestically that he is not going to take any action towards Taiwan in this year, at least, and probably not in the foreseeable future. At the same time, I think the impact here is China's not going to want to see oil prices going well over $100. That's going to push up costs for the average citizen here. It's not going to be good politically.
All right, John, thank you very much. Really fascinating story. That's John Liu, Bloomberg's managing editor for China. John mentioned oil. We do continue to see Brent prices move higher. They're still above $100, just floating around $101. Obviously, it's not just a problem for Asia markets. It's worldwide. What does this mean for inflation? Well, that's it for Bloomberg Markets Open. Surveillance Early Edition is up next. I'm sticking around. I'll walk you through that as well. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
The sanctions against Russia will match the level of aggression.
We will continue on a remorseless mission to squeeze Russia from the global economy.
We've cut off Russia's largest bank, cut it off the U.S. financial system.
We are not going to harm the world economy system as long as we are a part of it.
Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, happy Friday, and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Here's what's coming up on today's program. Russia's invasion of Ukraine intensifies. Moscow forces seize Chernobyl and close in on the capital, Kyiv. The U.S. and its allies ramp up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. Zelensky says Ukrainian forces are fighting back, but he says that the West sanctions don't go far enough. First, let's get a check on markets as we digest the past 24 hours. It was a big rebound yesterday on Wall Street. We are seeing European stocks move higher, not as large of a rebound. We have the situation where the tail risk has now become the base case. So that geopolitical concern certainly still priced into European equities, despite the fact we're up by about 0.6%. The best performing sector today is basic resources, 1.4%. We have seen commodities across the board chart higher, allowing the sector really to outperform. That also means London outperforming today, given most are listed on the FTSE. Russia off its highs for the morning. At one point, it was up nearly 25%, up 14%. Still a remarkable turnaround, but nothing to undo yesterday's losses of over 30%. Hundreds of billions of dollars in market cap wiped out. Now, we also are looking at some of the natural gas gains coming back. And when I say some, I do mean a lot. 24% lower. We're still above 102 euro megawatt per hour. We're still seeing gas flow through from Russia to the rest of Europe. Sanctions perhaps not as harsh there. That's allowing a little bit of those really sky-high prices to come down. Wheat also coming down slightly, down 2% after some record gains yesterday. Brent crude, though, that is still moving higher, higher by nearly 2%. We're over $100 a barrel. Is it an oil shock that these markets need to price in? And finally, the ruble gaining up 0.6% versus the dollar. Now, Joe Biden did impose tough new sanctions on Russia, and Western nations also warned that Ukraine's capital, Kyiv, could fall.
We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
We will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine.
We took a political decision to add an additional package of mass sanctions, which will be painful for the Russian regime.
We will never tolerate any attempt to change the status quo by force. We will tighten our sanctions and stand in solidarity with the international communities.
There was certainly duplicity. A choice, a deliberate choice, was taken consciously by President Putin to launch a war.
We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week.
Now we have to meet the moment. We will hold the Kremlin accountable.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
Russia's invasion of Ukraine has been intensifying. Russian forces have seized the highly radioactive nuclear plant in Chernobyl, 80 miles north of the capital, Kyiv. In a speech this morning, Zelensky said that Ukrainian forces are resisting the assault, but the Ukrainian president has also questioned the effectiveness of the West's sanctions on Moscow.
This morning we are defending our state by ourselves as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Now we have reporters around the world, so let's get an update. First up, let's go to Moscow and to our Henry Meyer. Henry, this is a really fast-paced situation. Things are changing quickly. Catch us up to speed on what things look like on the ground in Ukraine, where troops are, and what the latest is.
Right. I mean, we had a lightning advance that began yesterday where Russian troops entered Ukraine from 3 different directions. They carried out a punishing barrage of artillery and airstrikes and missile strikes that wiped out Ukraine's air defense capability. They now have control of the skies, and what we're seeing is they're closing in on the capital, Kiev, where overnight there were major missile attacks.
All right, in Brussels, we also have our reporter, Maria Tadeo. Maria, let me bring you into this as well. Yesterday, we have this emergency EU summit. What are we seeing in terms of the European response and the new sanctions and their ability to impact Russia?
Well, Danny, yesterday at 2 a.m. in the morning, European leaders agreed to what is essentially, in many ways, the biggest sanctions package they've ever put on the table against a single country. We know this is going to hit many industries of the Russian economy, and we know that the European Union at this point is really trying to prevent Vladimir Putin to fund what they believe could be a continuous war effort. By the way, in this call, and this is an important detail, Volodymyr Zelensky, the Ukrainian president, jumped into this conference call with European leaders, and 27 of them in that meeting. Of course, the flip side, however, is the fact that they kept the SWIFT payment system out of the sanctions package. The Ukrainians had said, if you don't support this, you will have blood on your hands. You need to completely isolate Russia by cutting them off the SWIFT. Now, what you're seeing here, of course, is growing frustration from the Ukrainian government, and a lot of this response, Danny, to different priorities. What is clear now when you look at the European response is that they're betting on a long-term economic demise of Russia. But the problem, of course, as you know, is the Ukrainian people, they say we have short-term needs and we need help on the cash front and also the weapons. On those questions, Zelensky yesterday, in a very tough speech, said we had no perspective from our European colleagues on the fundamental questions.
Now, to that SWIFT point, this is something that UK Prime Minister Boris Johnson has floated as a tool. Our very own Lizzie Burden is outside of Downing Street for us. Lizzie, at the start of this, at the start of sanctions, Boris Johnson was accused of not being up to task, not being at the level that the EU and US were. New sanctions, of course, unveiled yesterday. As I mentioned, he brings up SWIFT. How does he stand now compared to the rest of Europe?
Yes, Danny, in front of Downing Street, well, on the top of the building, the Ukrainian flag is flying. But apart from that outward display of solidarity, as you say, the first set of sanctions were decried as meaningless, not just by the opposition Labour Party, but also by some of Johnson's own MPs and city executives. So, as you say, he has ramped up the sanctions package. The government says it's the toughest Britain's ever imposed. It includes an asset freeze on all major Russian banks, and he wants to go further. Johnson wants to ban Russian access to SWIFT, but it would require international cooperation, which, as Maria says, isn't forthcoming at the moment. But the risk for the UK is the blowback of any of these measures because of just how closely the City of London has courted emerging wealth in the decades since the Cold War.
Let's also get the view from D.C. and Bruce Einhorn. You join us as well. Bruce, Biden also had a speech yesterday, new sanctions from the U.S. alongside U.K. and Europe. Maria and Lizzie gave us that view. How far is the U.S. willing to go?
Well, President Biden talked about the possibility of cutting off SWIFT, but said that that's not in the current sanctions because of a lack of consensus, and pointed to opposition in Europe. It does seem like it is still a live issue in D.C. We know that there are Democrats and Republicans alike on Capitol Hill who have called for this. The administration's argument at the moment is that the sanctions that target specific banks, including five large banks, that those already cover nearly 80% of the banking assets in Russia. So the sanctions that the U.S. has imposed do a lot of what the critics who say that SWIFT needs to be part of it, that it accomplishes a lot of that already. In addition to those sanctions, the U.S. also imposed additional sanctions on Russian imports of U.S. technology products like software and semiconductors. Significantly, the U.S. is also able to prevent those from being sent via third countries. And the U.S. also sanctioned members of Russia's elite and family members and state-owned enterprises. So that's the full package at the moment.
Bruce, thorough as always. And really thank you to everyone. A very fast-moving situation. We appreciate the update. That's Henry Meyer, Maria Tadeo, Lizzie Burden, and Bruce Einhorn. Now let's get to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Danny. ECB policymakers are signaling that the exit from stimulus may be delayed but not stopped this year, given the conflict in Ukraine. Austrian Central Bank Governor Robert Holzmann told Bloomberg that Russia's invasion does not fundamentally change the outlook for the Eurozone economy, though it may slow the unwind from an ultra-loose policy. His view was echoed by officials from at least 2 other central banks. The Federal Reserve still looks set to raise rates next month, despite uncertainty posed to the global economy by Russia's invasion of Ukraine. Officials, including Cleveland President Loretta Mester and Atlanta's Raphael Bostic, are stressing the need to confront inflationary pressures. Meanwhile, Governor Christopher Waller says a half-point move higher could be justified next month if economic data keeps coming in hot. Bloomberg's learned that President Biden has decided on a nominee for a seat on the Supreme Court. No word on who it is when the selection will be announced. The president has already said he would select a black female. That would fulfill a promise he made during the 2020 campaign. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Laura, thank you so much. Now, up next, we're going to continue to bring you the latest market reaction to the crisis unfolding in Ukraine. If you have any questions for us, any of our guests, IB plus TV Go on your terminal. This is Bloomberg.
Is moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, Why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Welcome back to Bloomberg Surveillance. This is the early edition. Now, markets slightly rebounding this morning after a tumultuous session yesterday that saw Wall Street ending higher as we continue to evaluate the ongoing invasion of Ukraine. Joining us now is Sweta Ramachandran, Global Equities Investment Manager at GAM. Sweta, thanks so much for joining us. This is a question that I've been asking to a lot of guests. When you look at a day like yesterday, over the past 24 hours, the fast-paced movements of not just markets, but of course the unfolding situation, do you just rip up the playbook?
It certainly can be tempting to do so with the speed at which these events are occurring, but I think sometimes a step back and some perspective is needed. In that light, I think this morning's recovery in Europe versus the very sharp snapback that we saw in U.S. equities yesterday is perhaps interesting of what lies ahead for European equities versus U.S. equities, given the greater exposure that the former has to the unfolding situation in Russia and Ukraine than perhaps the latter, where the U.S. economy is a little more defensive and insulated because of its energy self-sufficiency.
Yeah, I find that fascinating because before the tensions and the crisis unfold, there had been this narrative of 2022 will be a year for value. It'll be a year where specifically regions like Europe are the ones to outperform the U.S. Do we have to completely reimagine that narrative given the potential economic consequences?
That very strong rotation to value is what people were calling a regime change that we saw since the start of January has actually almost fully reversed now. So that outperformance of European equities relative to the U.S. Has pretty much all but given up all of its gains as of yesterday's close. That said, I don't think it's going to be that easy. It's not a case of throwing the baby out with the bathwater because there are still pockets of value. And I would say commodities, by and large, still fall in this bucket, given that the integrated oil companies, their performance has really lagged the very sharp recovery in oil prices. Those still remain interesting. I think what could be under question is perhaps the outperformance of financials. And that's what we're seeing of the last 2 days in Europe as financial conditions perhaps tighten as a result of unfolding actions.
Okay, so it's still some of those value names, but as you say, not banks, for example. When you look at the U.S., so we had this really big rebound yesterday. What does that tell you in terms of impact that this could have on U.S. assets?
I think U.S. assets are currently being seen as somewhat of a safe haven. Dollar has done very well on the back of unfolding developments. There's definitely, the reality is that the U.S. market is less operationally geared to even growth. So shaving off a percentage of GDP growth has far fewer ramifications for U.S. equities than it does to European equities. And as the reality of perhaps a growth slowdown starts to be priced in, people are, I think, making the judgment that U.S. equities are a safer place place to be. I mean, there's also the case to be made for valuation, where on a relative basis now European equities look very undervalued to U.S. equities. But in the first instance, I think there will be this flight to safety first before the question of valuation starts to dominate investor attention again.
Right, well, you get a high beta sector in the U.S. like tech that sells off more severely yesterday. It is down more today, pre-market down 1.2%. Is that really just, again, because this is a higher beta sector that it reacts like that? Because it is this strange link when you see geopolitical angst translate into U.S. tech selling off.
Yeah, it's very hard to draw short-term conclusions from daily market movements because geopolitical tensions, while they cause a lot of whipsaw and volatility in the short term, in the long term, they don't really affect the trajectory of markets permanently. So I think what we're seeing now is typical volatility because no one really knows the end point of the current situation, what the intended actions of the current military actions are, whether it's occupation or whether it's to seek regime change. And I think all of those, while there is still uncertainty, will still be in this space of volatility where there's probably no clear direction for markets in the short term.
All right, Sweta, thank you very much. You're going to stick around with us, Sweta Ramachandran, Global Equities Investment Manager at GAM. Now, we also have live pictures to bring you of Russian Foreign Minister Sergei Lavrov. He's meeting with the self-proclaimed Deputy Foreign Minister of the rebel-controlled Donetsk region. Now, it's also the self-proclaimed Foreign Minister of the rebel-controlled region there as well. We're going to continue to show you these pictures. Again, this is a very fast-paced moving situation in terms of where Russian troops are and reactions as well. So we're going to continue to bring you the latest market reaction to the war in Ukraine. If you have any questions for us or any of our guests, IB plus TV Go. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
however you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
My preference is to increase the target rate for the federal funds rate 100 basis points by the middle of this year. That is, I expect inflation to remain elevated and only show modest signs of deceleration over the next couple of months.
Federal Reserve Governor Chris Waller discussing the possibility of more Fed rate hikes, reassuring investors that the central bank's outlook won't be derailed by events in Ukraine. Still with us is Sweta Ramachandran, Global Equities Investment Manager at GAM. So we did see yesterday, as the market was selling off, of course it rebounded, we started to see investors back off on their bets that 50 basis points would be the call in March. Does the events unfolding in Ukraine, should it give the Fed pause in terms of acting really swiftly and sharply in their next meeting?
Certainly, these developments will give central banks around the world a more cautionary approach. That said, I think the Fed is sort of walking a very tightrope between managing the second-round effects, basically, that have permeated consumers on wages and expectations of inflation, which have actually come from commodity prices, from not being able to raise rates. So the flexibility for maneuver that they have is far more limited, given wage inflation is already pretty much entrenched in the U.S., running at about 4.5%. In the EU, perhaps it's a different story. The ECB has certainly suggested that they may look at delaying the rate hike trajectory, and that's because wage inflation hasn't really taken hold here. It's running at half the clip that it is in the U.S. Even if the Fed doesn't increase by 50 basis points in March, I think it's reasonable to assume that the trajectory by the end of the year, we will still get to about 2.2%, which is what the market is expecting.
And of course, in Europe, it's a different picture because they, of course, are more directly exposed. But I just want to bring us some breaking lines crossing now. This is from Interfax, of course, the Russian local news agency, is saying Russia has prepared sanctions to hit West's weak points. This comes after Putin himself did warn that there would be a reaction to sanctions put on Russia. So again, Russia saying it has prepared sanctions to hit the West's weak points. And the Interfax here citing Russian Parliament upper chamber speaker. Sweta, so possible retaliation from Russia, and there continues to be this concern of what happens in the economy in Europe as we continue to see gas, commodity prices go higher even after they were already extremely high. Can the ECB go forward with any form of tightening?
It certainly seems that is likely to be delayed, even as commodity inflation starts to bite. These increasing uncertainties are likely to shave off a decent proportion of the expected growth for the European region. And Europe is very cyclically geared, so a 1 percentage point shaving off of growth actually has meaningful impact for the region's equities, which is quite bearish for European equities, hence the reaction in the markets today.
All right, Sweta, thank you so much for joining us this morning. Great to have you on the program. That's Sweta Ramachandran, Global Equities Investment Manager at GAM. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Russia's invasion of Ukraine intensifies. Moscow forces seize Chernobyl and close in on the capital, Kyiv. The U.S. and its allies ramp up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. Zelensky says Ukrainian forces are fighting back, but he says the West sanctions don't go far enough. Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London, standing in for Francine Lacroix. Now, we have seen a rebound in markets. It was very notable yesterday in the U.S., not as strong here in Europe. Our last guest, Swetarad Machandran, saying that this shows how much risk and fear is still in the European system, that it's not coming back as strongly. Some of the big gainers, though, basic resources, as we continue to see commodity prices move higher. Russian assets up 13% in the MOEX equity index. And we are looking at bond buying still coming through, up 3 basis points. Your 10-year yield at 193. Now, natural gas also off of its highs from yesterday. It's down 23%. Russian gas is still flowing from Russia through Ukraine into the rest of Europe. Sanctions perhaps not as harsh, allowing for those prices to come down. Wheat prices also falling after yesterday's rally. Brent crude still around $100 a barrel. Now, Joe Biden, he did impose new sanctions on Russia, and Western nations also warned that Ukraine's capital could fall.
We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
We will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine.
We took a political decision to add an additional package of mass sanctions, which will be painful for the Russian regime.
We will never tolerate any attempt to change the status quo by force. We will tighten our sanctions and stand in solidarity with the international communities.
There was certainly duplicity. A choice, a deliberate choice, was taken consciously by President Putin to launch a war.
We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week.
Now we have to meet the moment. We will hold the Kremlin accountable.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
Now, at the same time, Russia's invasion of Ukraine is intensifying. Russian forces have seized the highly radioactive nuclear plant in Chernobyl, 80 miles north of the capital, Kyiv. In a speech this morning, Volodymyr Zelensky says that Ukrainian forces are resisting the assault, but the Ukrainian president has also questioned the effectiveness of the West sanctions on Moscow.
Цим ранком ми захищаємо нашу державу.
This morning we are defending our state by ourselves as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Let's get the latest from Moscow with our editor, Tony Halpin. Tony, it's a fast-paced moving situation. Where do we stand now in terms of where Russian troops are in Ukraine?
Yes, well, Russian troops have been advancing on three fronts, really, from the north through Belarus, Crimea in the south, and as you noted, they're approaching the capital, Kiev. There have been reports of missile strikes on Kiev overnight and fighting on the outskirts between Ukrainian and Russian forces. Ukraine has said that it intends to defend itself and will attempt to hold its capital, but clearly there's an awful lot of pressure coming now from Russian military forces.
All right, Tony, thank you very much for the latest update. That's Tony Halpin, our government editor in Moscow. Now, joining us is Tyler Kostra, assistant professor of politics and international relations at the University of Nottingham. Tyler, thanks so much for joining us this morning. First, we had the U.S., UK, and Europe announce new sanctions yesterday that stopped short of the most extreme of removing Russia's access to SWIFT, of halting flows of gas. Your first take on that?
Well, I mean, that's what Russia is really scared of, right? This is what the majority of Russian international trade is oil and natural gas. And if you're not going to stop that, if you're not going to stop the flow of oil and natural gas into Europe, if you're not going to disconnect Russia from the SWIFT financial system, if the U.S. is still going to allow dollar clearing of energy trades through New York banks, then effectively these sanctions are a little grab bag of obnoxious things to do to Russia, make Sergei Lavrov go and get a visa the next time he needs to fly to Brussels or something. But they're not substantial. They are simply a little bits and pieces, crumbs, to try to stop an invasion.
If sanctions were to reach this level of blocking them from SWIFT, of blocking commodity flow as well from Russia, is that enough to potentially stop Putin?
You know, I don't know what would be enough. Obviously, Putin is willing to mobilize over 100,000 troops, invade and dismember a sovereign country, deal with the casualties that is going to result. But I think we owe it to the Ukrainians to try. You know, we had, the United States and the UK gave security assurances to Ukraine when it gave up its nuclear weapons in 1994. And I think at a minimum, we should say to the Russians, look, if you go in and start a destabilizing war in Europe, you're not going to be able to go off and clear your energy trades through New York banks.
Well, this is sort of the confusion to try to sort out. Is the reason that Europe, UK, US not going there because they want to have something in their back pocket? They want an incremental approach to sanctions? Or is it really just not having the stomach for the economic consequences of what blocking gas, for example, would do?
Well, I don't understand what they think is going to happen later. I mean, we have Russian tanks on the border of Kyiv right now, right? The country is in a very precarious situation and could fall within the next 24 or 48 hours. So why would you hold that? I think what it would be is a very large concern of what higher energy prices in Europe would do to European consumers and European voters.
Yeah, and right now we're looking at a great opinion piece from Javier Blas, who talks about that the sort of shock and awe approach could be what you're talking about, that the West is actually financing Putin's war in Ukraine, buying hundreds of millions of dollars worth of Russian natural resources every day. Either stop buying them or find a way to stop the payments. Now, there has also been a lot made of this idea of Fortress Russia, that they've prepared themselves for sanctions. They're running surpluses. They have raised capital. How would you describe, again, this idea of Fortress Russia and their impenetrability of sanctions from the West?
Well, I don't think, I think Russia has done a lot of work to make sure you're right, that they don't need to rely on Western financing for government debt, that they don't need to go off and raise capital in Western markets to the same extent. They have very large foreign currency reserves that can be used to prop up the ruble for a time. So the main economic weak point in Russia is the fact that it's a petrostate and that its economy depends on selling oil and natural gas to the West. And so long as we continue to allow them to do that, we're not actually taking them on where it would hurt them. Instead, we're putting on sanctions that will harass some Russian banks and cause people to have to move accounts from one bank to another. But these aren't substantive sanctions to deal with the worst crisis in Europe since 1945.
Well, I guess sanctions can go two ways, Tyler, and we have learned, Interfax at least is reporting that Russia has prepared sanctions to hit West's weak points. They're citing Russian Parliament upper chamber speakers saying this. What could Russia do on the flip side that would, as they're describing, hit the West's weak points?
They can't unless they cut off the flow of gas. And of course, that would obviously cut off the payments for gas. Otherwise, look, most of what Russia exports are natural resources. And apart from energy natural resources, they export some metals, they export some, foodstuffs. All of that could easily be transshipped. I'm not terribly worried. If Russia says we're not going to sell palladium to the U.S., then all they'll do is they'll wind up having some buyer in some third country purchase it and then sell it to the U.S. That's not a terrible concern. The concern,
I mean, Go ahead, Tyler.
Yeah, the concern is, frankly, oil and natural gas, and if neither player wants to, if both players want to continue to sell that and buy that, then there is no effective cutting off Russia from global trade.
Yeah, it's almost this sort of twisted game of chicken of who's willing to push it the furthest and really see that damage from the economic consequences of oil and gas. Tyler, thanks so much for joining us this morning. Tyler Kustra, Assistant Professor of Politics and International Relations at the University of Nottingham. Now, we continue to see European equities march higher. They are up by about 0.8%. Not as strong as what we've seen in the U.S. sessions, but basic resources leading the gains as commodity prices move higher. Russia stocks also up 13%, on track for some of their biggest gains since 2008. Of course, that's following the biggest loss for Russia stocks on record, down more than 30% yesterday. So we haven't even really had some of those losses. And geopolitical risks still present in these markets. Bond buying still in. 194 is where we stand on your 10-year yield. Now, coming up, geopolitics and the latest fallout from the war in Ukraine. We're going to speak to Wolfgang Piccoli, Teneo co-president of Political Risk. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now let's take a look at how some of the major newspapers are covering the war in Ukraine. The Daily Telegraph, they lead with new Cold War as Putin strikes. The Times, a dark day for Europe. Putin invades is on the Guardian's front page, and the Liberation in France says unthinkable. And finally, Russia's largest independent newspaper published this edition in Ukrainian as a show of solidarity against Putin's invasion. You can see there the color of the flags of both Russia and Ukraine. Joining us now to discuss this is Wolf Piccoli, co-president of Teneo's Political Risk Advisory. Wolf, thanks so much for joining us this morning. Now, it really was a fast-moving and fast-developing situation. Yesterday, it caught some by surprise, of course, others perhaps not so. But this really fast-paced action by Putin of troops into Ukraine bordering on Kyiv, what do you make of what the calculation is by Putin in terms of reaching what his end goal is?
Well, first of all, I think the aim is trying to reach the end goal as quickly as possible, and the end goal is a capitulation of the government in Kyiv, its replacement with an entity that is more compliant, the crippling, military crippling of Ukraine, this possible partition eventually, and this economic, bringing the country down economically. That is the aim. Now the question is how long it's going to take. Potentially not much. It depends on what we're going to see in Kiev over the next few hours, if not days. Whether the resistance that we've been hearing about will really materialize, or whether after being under Russian attack, it will melt quickly.
Should that happen, Wolf, talk me through how much of a game changer this would be in terms of European security.
It's huge. Well, Ukraine at the end of the day is already lost. It's just a question of time at this point, and how painful and how much bloodshed we will see. This will lead to a redesign of security in Europe. It will lead to a Europe where NATO, the ability of NATO and the European Union to ensure peace in Europe is being questioned. We're gonna have a huge area of destabilization. It goes from Estonia to Poland, from Romania all the way to Turkey. We're gonna have to see more defense spending. We're going to have to try to revive NATO if we can. That will depend very much on the US. And in the short term, we might even face a major migration crisis as well. So this is huge. And what is somewhat interesting to see here, that the European leaders last night spent hours to talk about sanctions rather than focusing on where Putin is going to eat next.
Well, I want to pause for a moment on one of the first things you just said there, that Ukraine is essentially already lost. Does that mean when Western nations are discussing sanctions, they're certainly not sending troops in there, but that none of these measures will work in terms of undoing what's already been done in Ukraine?
No, it won't. We have seen it before, this movie. We have seen it in Georgia in 2008. We have seen it in Crimea in 2014. We have witnessed it now. Sanctions do not work, do not deter Putin. They might, extract an economic price over term, but sanctions right now, they are designed to do one thing, to make ourselves in the West feel better. Because the reality here is that meanwhile, you have 45 million Ukrainians facing Russia alone. And the message has been very clear. Not a single NATO soldiers will be deployed or risk his life or her life to defend Ukraine. That is the reality.
Is that a mistake that troops from NATO aren't being deployed on the ground?
The mistake was being done for years, in the sense that there's been a consistent appeasement Putin without, meanwhile, beefing up the military power. So the mistake has been, going on for a long time. If you look even on the U.S. side here, every single U.S. president, starting from George W. Bush Sr., they've been trying to appease Putin. And they didn't get much in exchange, but they still continue. And now we are paying the price of that. We are trying to do deterrence with sanctions. It's simply not working. Putin is winning. He's winning. He won in Georgia. He won in Kazakhstan recently. He won in Belarus. He won in Moldova in the past, and in the Caucasus, and now he's winning in Ukraine.
He's winning in Ukraine. That is lost, in your opinion, Wolf. What does that mean going forward for other areas surrounding Ukraine and Russia, for Poland, for Romania, for Baltics? Should they be worried as well at this point?
I think there are lots of concerns in these countries, and the question will be whether NATO, not the European Union here, but NATO, and when we talk about NATO, we talk mainly about the US, will be able to provide the reassurance that this country needs. So we need to see significant deployments of armor, of manpower in these countries, and also we need to make very clear that Article 5 cannot be challenged by anybody. So there is lots of nervosism, lots of concerns in this country, and they've been raising this issue actually to give them credit for some time, but these messages were ignored by the leadership in Washington, Berlin, Paris, and so on.
Wolf, really great to have you on this morning with us. That's Wolfgang Piccoli, co-president of Teneo's Political Risk Advisory. Now let's get your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Danny. Things had already become tight for Russia's wealthiest individuals. Now they've gotten worse since Vladimir Putin's decision to invade Ukraine. In less than 24 hours, Russian billionaires lost $39 billion, more than they had lost up to that point this year. A handful of billionaires are subjected to sanctions from the West because of their ties to Putin. Morgan Stanley has disclosed that US regulators and prosecutors are investigating various aspects of its block trading business. A regulatory filing admitted that the bank itself is under scrutiny. Authorities are digging into how bankers and money managers carry out stock transactions big enough to move prices. That's the Bloomberg Business Flash. Danny.
Coming up, we're live in D.C. and we explore what new U.S. sanctions on Russia mean for the war in Ukraine and what we could see in terms of further measures. This is Bloomberg.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. that will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system. And today, we're also blocking 4 more major banks. That means every asset they have in America will be frozen.
President Joe Biden there announcing new sanctions yesterday. Joining us more on this from Washington, D.C. is congressional reporter Emily Wilkins. Emily, so the U.S. yesterday stopped short of issuing the harshest sanctions of blocking Russian access to SWIFT, U.S. oil cut off. How then would we characterize the sternness of the latest sanctions coming from the U.S.?
So President Biden has really portrayed these latest sanctions as being quite strict. They've been focused on targeting a number of top Russian banks, freezing more than $1 trillion in assets, and really targeting Russian elites. And this is something that the White House does believe is going to be able to inflict pain on Putin as well as on Russia's economy over time. But you're right, they did stop from doing some of the more drastic sanctions. Like we didn't see any sanctions on the energy sector or on aluminum. And the White House says that that's because they recognize that the world is going through this global recovery and they don't want to impair that with the sanctions. And on SWIFT, that's something where Biden said, you know, we're doing this with our European allies and they're not comfortable taking that step yet. Although you're right to point out, there are Democrats, top Democrats in Congress that are saying we need to look at some of these sanctions. We need to sanction Putin directly. We need to sanction its energy economy. And we need to go ahead and remove the financial institutions from the SWIFT system. So there are absolutely calls right now for President Biden to do more. It will be interesting to see when lawmakers get back to D.C. next week if they pass their own sanctions proposal and what is included in that.
Emily, quickly here, we have less than a minute. If they were to impose sanctions on oil and gas, is that politically an issue given the higher inflation that brings? 30 seconds.
I mean, higher gas is always going to be an issue for any sort of sitting president from a very political standpoint. And you've heard Biden be out front with this, admitting that any sort of conflict is going to raise prices. He's also said his administration are looking at ways to lower the cost at the pump for Americans. But so far, options like removing a federal gas tax don't seem to be on the table.
Emily, thank you so much. That's Bloomberg's congressional reporter, Emily Wilkins in D.C. Now, Bloomberg Surveillance Early Edition, it will continue in the next hour. Matt Miller, Kaylee Lyons, and Anna Edwards join for that as we continue to monitor a rebound in markets. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The sanctions against Russia will match the level of aggression.
We will continue on a remorseless mission to squeeze Russia from the global economy.
We've cut off Russia's largest bank, cut it off the U.S. financial system.
We are not going to harm the world economy system as long as we are a part of it.
Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Friday, February 25th. Our top stories today. Ukraine fights back. The country's president says his nation is still resisting on day 2 of the invasion, but Russian tanks and troops are pushing closer to Ukraine's capital. The West ramps up the sanctions. The U.S. targets Russia's largest bank and a number of the country's oligarchs. The EU plans to limit Moscow's access to Europe's financial sector. The word in the markets is volatility. European stocks are up, U.S. futures are down, and Brent crude fluctuates around $100 a barrel. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, here in Europe, equity markets taking the opportunity to bounce a little. Certainly utility stocks to the upside, given what we've heard on what is and is not included in the sanctions.
Well, and we saw a little bit of that bounce taking shape in Asia overnight as well, Anna. After the declines of Thursday, it was broadly a positive day for the regional benchmarks there. The MSCI Asia Pacific Index as a whole was up about 1 percentage point. You did have Hong Kong stocks lower, but Japan outperformed, and Chinese stocks also rose by about 1%. Part of that story in China, the PBOC injecting $46 billion of liquidity into the system. That is actually the biggest cash injection going back to 2020. So that aided Chinese stocks. And also, interestingly, we are seeing some strength for the Chinese yuan as well. It's stronger against the dollar by a little more than 0.1%. 631.40 is where we sit on the yuan at the moment. The yuan, interestingly, acting as somewhat of a haven asset amid all of this geopolitical turmoil that the market is dealing with. One haven asset not behaving in that way today, though. In fact, no bid for bonds really globally, or at least that was the case in Australia, with selling pressure coming in. The 10-year yield moving up to about 7.5 basis points to 2.233%. Not a lot of bid for bonds overnight. Matt.
Yeah, we have a little bit of a bid for the U.S. 10-year, but really not much to write home about. The S&P futures right now down about 0.8%. Of course, we had our bounce back yesterday, the 10-year at 194.43. Gold is still up over $1,900 a troy ounce, 1910.46. Only a gain of 1/3%, so also not a substantial move. And Bitcoin, although it's only up 0.6% at 38,637, it's back to the levels we saw at the beginning of the week, pre-invasion, if you will. So Bitcoin showing a little bit of risk-on indication. Anna, what do you see in Europe?
Yeah, well, we see a bit of that risk on coming through here in Matt, at least here in Europe, Matt, at least in the very short term. It seems that the fact that the sanctions didn't address the SWIFT payment system and didn't address the energy markets means there is, at least in the short term, a little way for these stocks to rally here in Europe. And catching up with the US latter part of the trading day yesterday. How much does that narrative, though, deserve to stay in the US, and how much of it should be reflected here on this very green European map today? Even the German market up by 0.75%, the CAC 40 and the FTSE 100 up by more than 1%. Energy prices, of course, key to this. We are seeing also a rebound in the Russian stock market this morning, up by 14%. So not erasing the losses of yesterday, but clearly a little bit of relief in terms of that Russian complex about what was not sanctioned, at least at this stage, because we've heard from a number of leaders globally that there could be further sanctions to come. We mentioned in our headlines that we're flirting with $100 a barrel. We are either side of it this morning here on the London trade. We have, of course, heard that energy is not part of the sanctions at this point. We also know that the US is going to release from its strategic petroleum reserves, but we wait to hear from OPEC next week. That could be the next interesting line to watch there. Natural gas prices, a real drop in those today. We saw these up this time yesterday, up around 30%, but because of that absence from the sanctions, now down by 20%. We actually saw Russian companies buying more Russian gas yesterday than they had in a very long time. More European companies, sorry, buying Russian gas than they had in a long time due to technicalities to do with the pricing of Russian gas. As it became cheaper, it was therefore bought up by those European corporates. An interesting one to sit alongside the geopolitics. The euro down by 0.1%, looking a lot calmer than it did this time yesterday. It was down by more than 1% then. We are going to hear from Christine Lagarde at the ECB a little bit later on. We've had French inflation data out this morning, Kaylee, that certainly surprised to the upside. A reminder, if we needed one, that if this is inflationary, if this geopolitics is inflationary, we already have plenty of inflation to worry about.
Yeah, so the central bank reaction function is definitely something we will keep an eye on. And if yesterday was any indication, Anna, the moves we're seeing this morning could look very, very different come this afternoon. So we will all have to pay close attention. And of course, there are a number of events as well taking place today that maybe could be potential catalysts. Up first, the NATO meeting will be taking place. Russia, of course, first and foremost on the agenda as it relates to the invasion of Ukraine. Then there will be an informal Eurogroup meeting in Paris. The ECB's Christine Lagarde, as Anna was alluding to, will be speaking at 9 a.m. New York time along French Finance Minister Bruno Le Maire. And finally, we'll get some U.S. economic data, including durable goods orders, PCE deflator, which is the Fed's preferred inflation gauge, as well as personal income and personal spending. Plus, you have University of Michigan sentiment data coming at 10 a.m. Eastern time. So a very important read coming on the inflation front. That could tee up the Federal Reserve decision in just a few weeks, Matt.
All right, but of course we are focused on what's going on in Ukraine. The president, Volodymyr Zelensky, said Moscow-led forces were continuing attacks on military and civilian targets for the second day of the invasion. President Zelensky said Ukraine's military had so far prevented Russia from achieving its objectives. He released a video this morning.
This morning we are defending our state by ourselves as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Let's get more with our reporters from around the world. From Moscow, we're joined by Bloomberg's Henry Meyer, who covers politics and international affairs. From Brussels, we're joined by our European correspondent, Maria Tadeo. And from Washington, D.C., we're joined by Bloomberg government reporter Emily Wilkins. Henry, let's start with you in Moscow. How is this being taken at home? We don't see the kind of protests that we would have in previous years, but maybe also not the fanfare support.
Well, I mean, I think there is clearly a lot of public disquiet at what is happening. I mean, state television is putting across this message that Russia was forced to act because of a so-called genocide by the Ukrainian government forces against separatist areas. There is, that message does seem to get through to some extent, but I think, they see the invasion taking place as totally disproportionate. There are a lot of family ties, friendship ties between Ukraine and Russia. For ordinary people here, this is a huge shock.
Henry, thank you very much for the update. Bloomberg's Henry Meyer joining us there. Let's get the European perspective. EU leaders backed a broad sanctions package on Thursday that will limit Russia's access to Europe's financial sector and restricting key technologies. European Commission President Ursula von der Leyen spoke in a news conference earlier today.
The European Union stands united. Tonight, European leaders were fully aligned in condemning the atrocious and unprovoked attacks. Now we have to meet the moment. We will hold the Kremlin accountable.
Let's get more from on the European response with our European correspondent, Maria Tadeo, who is live in Brussels. A lot of similarities by design in what we've heard in terms of sanctions from Europe, from the US and from the UK, and indeed from other countries as well. Maria, what's the latest?
Yes, Anna, and arguably on paper, this is the biggest sanctions package the European Union has ever put on the table with or against a single country. But you could hear the frustration of the Ukrainian president yesterday and today. By the way, he joined European leaders yesterday in this call in full military gear. What he did say, however, is that this is not enough. Ukraine is seeing very heavy fighting overnight, and he also said that he fears he is the #1 target of the Russian government, but nonetheless, he's going to stay put in Ukraine. He's not leaving the country for the time being. And Anna, the problem here, of course, is that the European aspect of this, the European take on these sanctions, is that they're aiming and they're in this for the long game. What they want is a long-term effect that is going to see a decline, a demise of the Russian economy. The problem, of course, for the people of Ukraine is that they have short-term needs. And what they say they need is cash, funding, and weapons for the time being. That is not really arriving as soon as they want it to be.
All right, Bloomberg's European correspondent Maria Tadeo in Brussels for us. Thank you so much. Now let's turn to Washington, D.C. President Biden imposing stiff sanctions on Russia as Western nations warned that Kyiv could fall. But the president said booting Russia from the critical SWIFT global financial messaging system is off the table for now.
The sanctions that we've proposed on all their banks are of equal consequence, maybe more consequence than SWIFT #1. #2, it is always an option, but right now that's not the position that the rest of Europe wishes to take.
Let's get more on the U.S. response now from Emily Wilkins of Bloomberg Government, who is in D.C. for us. Emily, SWIFT not on the table for now. Biden said yesterday that sanctions on Putin himself are on the table, yet when asked by a reporter in that briefing yesterday why he didn't make that move yesterday, he didn't answer the question. Could we see that move coming down the line? Well, that's something that lawmakers within Biden's own party are really pushing for. They want to see not only sanctions on Putin, they want to see sanctions on Russia's energy sector, and they do want to see Russian financial systems kicked off of the SWIFT system. And these are all things that you're hearing Democrats and Republicans alike calling for at this point. Now, the White House has explained why they didn't move for the SWIFT. They explained they don't want to hurt the world economy, which is why they didn't make sanctions on energy and aluminum. And they've talked a little bit about why they've put forward what they have. I think a very interesting angle to watch here. Lawmakers are not in D.C. right now. The House, the Senate, they have left Washington for the week. They won't be back until Monday. And it'll be very interesting to see what type of sanctions package Congress begins to push. They were working on one before they left for their current scheduled break, and they're expecting to pick that one back up. We know that lawmakers have been briefed yesterday, and will receive more briefings next week on the situation in Ukraine. And it's not just about what the sanctions are going to be. I think Maria pointed out that there's a big question about what aid Ukraine's going to get at this point. That's very much on the minds of lawmakers. You heard the White House yesterday say they would accept Ukrainian refugees. They want funding for that. And you've also heard talk about as much as $1 billion in funding from the United States for humanitarian aid to Ukraine. That number is not finalized yet, but it shows the fact that the U.S. is trying to think about what they need to do to help Ukrainians.
Emily, thank you. Emily Wilkins of Bloomberg Government. Let's get back to the market response here. Traders gasping after a day of twists and turns. Let's get more on the market response. Bloomberg's Danny Berger has details. Danny?
And it really was a remarkable day in market terms yesterday. Just looking at the NASDAQ, for an example, it opens gapping down 3% and ends the day higher more than 3%. This is something that has only happened 2 prior times in history, in 2000 and in 2001. Yesterday, it really was that first gut punch of the tail risk has now become the base case. A market reacts by selling off, but as Scott Minerd said on Twitter, that war, unfortunately, it does provide buying opportunities as dislocations present themselves in the market. And investors could be looking at tech and saying, okay, here's a dislocation. This is a part of the market that is insulated from the crisis unfolding in Ukraine. So we go in and we buy the dip. I was also talking to iShares head of investment strategy at EMEA earlier today, who also said it was the busiest day for his clients in ETF trading. So it really just shows how active everybody was on the market as they tried to digest the rapidly unfolding events.
In terms of what we expect from central banks, we're already talking about the possibility of an about face at the ECB. What about the Fed as we see real rates start to head more negative?
This is the issue, right? There could be severe economic consequences, especially for Europe, but are they going to be so severe in the U.S. that you can't have the Fed continue on their pace of rising interest rates? Some of those 50 basis points bets in the market did come off, but we had Fed speakers over the past 12 hours, many of them saying that that is still the scenario that they're looking at. Chris Waller said that, even though he did say it's too soon to know how Russia's attack on Ukraine will affect the U.S. economy. We had Raphael Bostic, for example, saying that they can continue with their liftoff plan if the data continues to come in on the same way. Now, you have similar language coming from Barkin and Mester yesterday as well, but the message really is that the data could show something different, but the risk of the data is really high inflation, high gas prices, high wheat prices, high food prices, and that forces the Fed's hand even quicker and more severely, Kaylee.
Well, and of course, we're going to get more data later on today. Thank you so much to Bloomberg's Danny Berger with a great look at the macro picture, but we also want to take a look at some micro stories, some stocks moving in pre-market trading here in the U.S. One to mention is Morgan Stanley. This firm now disclosing in a filing the DOJ investigation into its block trading practices. Of course, Bloomberg first reported on that last week, but now the firm acknowledging that it itself is under scrutiny and saying they are cooperating with that investigation, but that stock is down about 1.3%. A few other downside movers relate to earnings, one of them being Open Door Technologies, the online real estate platform. It missed expectations. It's down almost 10% as a result, and Coinbase also warning of a slowdown in trading in the current period. It's down 3.5%. But there are also some big earnings winners out there, a few really big upside movers in early hours. Etsy and Block, the former Square, both topping expectations. Block out with a really rosy outlook, and as a result, that stock up 16%, Etsy by 17%. Anna.
Kaylee, just some breaking lines coming through from Italy. Mario Draghi, of course, the Italian leader, saying Italy will seek to boost LNG imports from the United States, and says Italy could reopen coal plants amid the Ukraine crisis. Such are the decisions that are being made by European leaders. Italy relatively exposed to Russian gas and relatively exposed to gas in terms of its energy mix. Coming up here on this program, Peter Garney. We'll speak to Peter Garney, head of quantitative strategies at Saxo Bank, get his perspective on where the markets head from here. And on the international response, we'll talk to Fabrice Pottier, a defense policy expert who has advised two successive NATO secretaries general. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. Now, I mentioned earlier that real yields are heading back down. And if you take a look at the 30-year, the 10-year, we've got, well, I can't see that far away. Usually it's on the screen right next to me. The 5-year real yields here, all coming back down as we had been starting to, after we had been starting to feel some relief. The question is, what will central banks do about this, if anything? Kriti Gupta joins us, Bloomberg Markets correspondent. And Kriti, how does this affect, the rest of the market?
Yeah, well, what's interesting is that just a couple months ago, we were talking about the volatility picture, the idea that in the first quarter of 2022, there was going to be volatility anyway, right? It was pegged to the idea of a very hawkish Fed, the idea that we didn't know how many rate hikes there were going to be, what the balance sheet runoff kind of looked like. No one saw a Russian invasion coming. Sure, there were warnings, but it wasn't something the market was taking seriously. It was kind of in the background of the Fed. The reason that you're seeing such a steep decline right now, essentially further than a correction, going past that 10% drop, and you're continuously seeing a 20% bear market in the NASDAQ, and no real dip buying that's really sustainable, that's where your geopolitical risk comes in. And that's really kind of front and center right now where it comes to not only are you kind of pricing in a hawkish Fed, but you're also pricing in this risk. That's something that hasn't happened yet.
Well, on the subject of pricing a hawkish Fed, has that really changed at all, even in light of some of these geopolitical issues that have now come to the forefront?
I think it hasn't, in that I think everyone's pretty prepared for a March rate hike to begin with, right? The margin was the difference. Is it 25 basis points? Is it 50? What this geopolitical risk has essentially done is take 50 basis points somewhat off the table. Sure, there are still bets there that the Fed is going to go big and go aggressive, but it's that element of added uncertainty that kind of pushes that a little bit towards the background. What's important to keep in mind, though, here is that when we're talking about how the Fed is actually going to be impacting inflation in particular, and specifically energy prices, remember, they're not targeting energy prices specifically, they're targeting the underlying demand, which will then feed into energy prices. And remember, they're also doing this with the help of Washington in coordinating a potential SPR release, as well as an Iran nuclear deal. So the Fed has a lot to kind of juggle right now. And for that reason, I think the consensus for now is that they're not going to go as aggressively on that first rate hike as previously expected.
And Kriti, good morning. Where does that leave the ECB? I was drawn to the comments of Robert Holtzman yesterday, notably quite a hawkish voice, talking about how maybe this delays the normalization, the policy normalization could be delayed. Is that going to be the unanimous view? We'll hear from Lagarde later.
Yeah, Anna, what's interesting here is that although I think the Fed kind of bets are a little bit insulated almost from this geopolitical risk that you're seeing in Russia and in Europe, the ECB is a very different story. And there's two cases to be really made here. Well, the first case is that, in no particular order, I should add, the first case is that does this pull up those ECB hikes simply because of the inflationary effects of this, specifically targeting energy, specifically targeting natural gas. And once again, I reiterate that when you do start to see those rate hikes or that kind of pull out of stimulus, they're targeting demand, they're not targeting supply, and that's really what's significant. The other argument, the flip side of that, is delaying removing that stimulus, once again, because of that geopolitical risk and because of that uncertainty, and that's really why you're seeing the bond market, specifically in Europe and sovereign spreads, kind of being very choppy right now.
Okay, Kriti, thanks very much for the update. Bloomberg's Kriti Gupta. Back to the geopolitics. We're seeing a briefing by the Kremlin spokesman, Dmitry Peskov, saying that normalization in international ties will come in time. Also saying the Kremlin, Russia will retaliate for the US and EU sanctions, and saying that Ukraine neutrality, that offer is a move towards positive, which looks to be a response to what we heard from Zelensky overnight, the Ukrainian president, where he was throwing that into the mix, talking about the possibility of neutrality. policy. We'll certainly get into a geopolitics conversation. Does that sound like Finlandization, that concept that diplomats like to throw around? We'll get to that shortly. The market analysis there, MLI Vigo, that is the function to use on the terminal. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayla Lyons here in New York. Anna Edwards is in London. We are continuing to follow headlines from the Kremlin. Spokesman Dmitry Peskov saying that Russia will retaliate for U.S.-EU sanctions and that Russia thought the neutrality offer from Ukraine is a move towards the positive. Peter Garnery joins us next from Saxo Bank. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Ukraine is fighting back. President Zelensky says Ukrainian forces stopped Russia from achieving its objectives on the first day of the invasion. Still, Russian forces effectively eliminated Ukraine's air defenses, and they're closing in on the capital, Kyiv. The West tightens the screws. New U.S. sanctions go after Russia's largest banks and 4 other financial institutions. President Biden also targeted Russian elites and their family members. Meanwhile, the EU plans to limit Russia's access to Europe's financial sector and will restrict key technologies. The fighting in Ukraine is clouding the outlook for markets and the economic recovery. European stocks are higher, US equities are lower, and in terms of the futures, that is, and oil is fluctuating near $100 a barrel. Meanwhile, gold and the dollar are pretty steady. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Matt, what are you focused on as we head towards the start of US trade?
Well, I would say those headlines from the Kremlin that we just broke are important to markets. You've got to pull, obviously a needle out of a haystack here, but the idea that the Kremlin spokesman said the Ukrainian offer of neutrality is a move forward, maybe giving markets a little bit of relief. S&P futures are still down, but coming off of their biggest losses. There is still a slight bid on the 10-year, but remember we were at 194 just about 20 minutes ago. Now we're at 196.17. And Zelensky didn't actually offer Ukrainian neutrality. We pulled that out of his address, but he floated the idea of discussing Ukrainian neutrality, and that could be the headline that markets really grasp onto. Gold spot right now up, still 1910 a troy ounce, so little changed from when we spoke earlier, and Bitcoin also little change right now at 38,670, though still positive for the day. Kaylee, what do you see in terms of pre-market movers?
Well, one mover really stands out to me, and that is Yandex, which is a Russian internet company that is listed here in the U.S. Over the last 5 days, this is a stock that has plunged 62% amid all of those geopolitical tensions and, of course, the ultimate invasion of Ukraine by Russia. So it is seeing a rebound this morning. It's up nearly 10 percentage points, but that only goes so far in recovering some of the losses it has seen over the last week. There are also some other way larger upside movers in U.S. trading, early trading, that is. Farfetch, of course, reported after the bell last night, the online retailer reporting a smaller loss than expected. So it's up nearly 30%. You also have a big 16% move or so to the upside for Block, the former Square, which gave a rosy outlook for the rest of the year, thanks in part to the integration of its acquisition of Afterpay. One stock to the downside, though, Zscaler. This is a security software company. It is sinking after reporting its results, down more than 13% before the bell, Anna.
Kaylee, let's have a quick check on the European markets then. And we are seeing European equity markets bouncing quite substantially this morning, not making up for the losses of yesterday, but certainly bouncing, reflecting really what we saw late in the day in the United States on Wall Street in yesterday's session. So the sanctions, not including energy and not including the SWIFT system, that gives markets a little room, risk assets a little room to rally in the short term, up by 1.7% on European stocks. Where does the FTSE stand in all of that? We didn't see it sell off as much as the rest yesterday. The bounce quite good today, up by 2%. I pulled out the FTSE because we saw Goldman Sachs increasing their 12-month expectation for where the FTSE closes and decreasing their stock 600 call. So pivoting a little more towards the UK market, or at least the UK benchmark, not necessarily the UK economy, but given the weighting towards banks and also obviously energy. Talking of energy, 99.24 is the Brent price, so just below that $100 a barrel. We, of course, are not sanctioned. There's no sanctions on energy products at this point. We've heard from the United States about releasing from their strategic reserves, and we wait to hear what OPEC has to say. OPEC meets next week. Natural gas, this is clearly good news for Mario Draghi, the Prime Minister over in Italy, talking about the pain that could be inflicted on Italian consumers when it comes to the cost of energy, but up yesterday some 30% at this time of the day, down by nearly 20% in today's session. Incredible volatility on these wholesale prices. Of course, the consumer not necessarily feeling the wholesale price, Kaylee, but clearly the inflation impact of all of this is pretty evident.
Well, and it's not just incredible volatility in natural gas, it is incredible volatility across asset classes, Anna, as the conflict in Ukraine just continues to muddy the outlook for markets. Here's some of our reaction from guests.
What we've seen in this escalation is just a rise in uncertainty, and that means a rise in risk premium.
If a full-scale war breaks out, there would be a big shock. It would likely have a big impact on inflation.
Now we have this invasion. That's not going to help consumer confidence.
The markets are now really pricing quite a big slowdown, and positioning has become quite negative.
And these one-off upward price pressures really add to the risk of inflation expectations getting away.
I think China is going to be a safe haven.
I'm not sure this completely takes the Fed off the table.
Barring an unexpected turn in the economy, I believe it will be appropriate to move the funds rate up in March.
It's timely for us to normalize policy.
A strong case can be made for a 50 basis point hike in March.
Policy is really poised to return to a more normalized stance.
We're going to have to see whether this Ukrainian situation changes that narrative. And I just think time will tell.
The cumulative amount of rate hikes in this cycle should and will be, in our view, a lot more muted.
They're going to throw the ball straight down the middle and try to avoid surprises.
Joining us now is Peter Garnery, head of equity strategy at Saxo Bank. Peter, I want to come back to something Anna mentioned, which is Goldman Sachs downgrading their targets for European stocks. Sharon Bell and the team writing in a note, in light of the conflict, the rise in risk aversion, some of which will likely linger, and the impact on the growth and inflation mix, we take down our target prices. Peter, has the conflict in Ukraine changed your outlook on Europe?
We already had a defensive stance on equities, and we have had a Q4 earnings season showing that we have had now 2 straight quarters of margin pressure at companies. So the operational environment for companies is very difficult and challenging because of the inflationary pressures. And we agree with the assessment from Goldman that the current situation and the events unfolding in Ukraine is adding fire to that and more headwind for companies. And I think if you watch through the earnings season and the price action lately, you can clearly see, and it makes sense, that the market is not favoring growth any longer, revenue growth. That's not the key point here. The key point is your operating margin. When you have the current equity valuation you have and the current outlook, a 1 percentage point lower expectation for operating margins over a 5-year period has a much more negative impact on equity valuations than you beating revenue estimates a little bit. So that's the key watch. And you saw that with Block overnight. They were up 30% in Sydney trading because they beat on operating margin and their outlook. And that's the key thing. And you have a lot of companies that don't have the pricing power. They can move on. They cannot, pass on all their cost to their customers and consumers. So this is really critical. And that's why companies with pricing power in this environment will do well, but also energy and mining companies, because it's really the physical world, the supply side of our economy that is really giving the shocks to companies right now.
Yeah. Peter, and what would the sensible course of action be for the ECB with that in mind? We heard from Robert Holtzman and some other commentary, and some market assumptions seem to be pushing out when we get that policy normalization from the ECB. But at the same time, we saw French inflation data really coming in well above targets today, or well above estimates, sorry. And that only reminds us of the inflation that is already baked in, and yet we probably have more of it to come.
Exactly. I think the central banks are increasingly in a very tough position because they need to battle inflation. We know the inflation is coming from the supply side. So what you could do is raising rates, and that will choke off or kill a little bit of the demand, cooling prices. But then on top of this, you have demand destruction already coming from inflation. It's pressing households and companies already, and it will be more so in Europe versus the US. The US is in a much better energy situation. And then you have that situation that if central banks don't get it right and they tighten financial conditions and monetary conditions too much, despite they probably have to do it because of the inflationary pressures, then we go into a mild recession. And then the worry for me is that we haven't solved the structural issues on the supply side of our economy. We're simply not investing enough in oil and gas and other critical natural resources. Investments are too low. And then you get a fiscal response, and then just like in the 1970s, bam, we're back into slamming into the inflation barrier because we are limited on the physical side of our economy.
Is that stagflation then, Peter? And there are shades of stagflation because you can define it differently, but how would you characterize what we're heading into?
Yeah, I would call it stagflation, but in a light version. I don't think we'll go back to the 1970s. There will be a lot of similarities, policy mistakes, subsidies from politicians. There is no easy fix to this, but I would call it stagflation light. We have a much more fragmented and distributed global economy. Companies operate with much better information systems and planning tools than we had in the 70s. So I think it's a little bit of a different situation, but definitely there are threats back to the 1970s. And that, if you look through that period, was not a very good period for equities in real terms. You had a negative period in terms of real equity returns from 1968 to 1982 in the US. So I think this is really a time to rethink your paradigms and your views on equities. I really think that we are witnessing, or we are in the middle of a regime shift here.
What would you, do you look back then at the playbook from the 70s and try and take a few pages out of that? And what would they be?
Yeah, so this is the tricky part. The economy are constantly changing. You can draw parallels, but you have to be quite difficult because we also have a digital economy. Things work differently than it did in the 1970s. But the playbook, as far as we see it, is you go for companies with pricing power. That's the Warren Buffett method, right? You need to get exposure to mining companies, energy companies has proven to be this week your natural hedge. We like cybersecurity because of all the reasons that we're seeing in Ukraine and Russia these days, and cybersecurity has become a necessity. So we like that. Logistics, to some extent also semiconductors. Those are some of the areas where you need to increase your exposure. And then, from a asset allocation perspective, you need to also think about gold. You have to be at the short end of the yield curve, etc. But I think that goes without saying almost.
Peter, thank you so much for your time. Peter Garnery, Head of Equity Strategy at Saxo Bank. Coming up on this program, we'll be discussing the international response with Fabrice Potier, a defense policy expert who's advised two successive NATO Secretaries General, Anders Fogh Rasmussen and Jens Stoltenberg. We'll get to that conversation shortly. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
That was Russian President Vladimir Putin talking earlier. Now, joining us is Fabrice Potier, Chief Strategy Officer at Rasmussen Global. Fabrice served as Head of Policy Planning for 2 successive NATO Secretaries General. Fabrice, great to have your expertise then with us on the program. We just heard there from Vladimir Putin. How far do his ambitions go here, do you think?
I think his ambition goes all the way to Kiev politically, meaning that he wants to really put Ukraine down and make sure Ukraine can kind of operate on his terms. So that implies no NATO membership, no EU membership, but also a Ukrainian foreign policy and even domestic policy that will be aligned with Moscow. So which is basically what he's been doing in Belarus, in Kazakhstan. So he's trying to recreate the Soviet Empire.
Would an offer of neutrality from Ukraine, we heard Vladimir Zelensky earlier say that Ukraine isn't afraid to talk about neutrality. Would that be a way to get out of this military conflict?
I honestly don't know, because we have always been thinking, oh, we need to give, Vladimir Putin just a bit and meet his demands, so somehow he will not attack us or attack Ukraine or Georgia. And every time we've done that, he actually did attack Georgia, Ukraine, or other places.
Right. I mean,
in the world. So I think there is yeah. Go ahead.
Well, you know what? The bottom line, and I've been wondering this already for months, if not years. Why is it not morally reprehensible to buy Russian oil, gas, and aluminum? I mean, President Biden talks about keeping prices down at the pump, but there are people being killed and homes being destroyed in Ukraine. If there were a restaurant chain that was flagrantly discriminating against a protected group, we wouldn't go eat dinner there, even if it was the only restaurant. So why is it okay for the EU to say, leave them in SWIFT, we're going to keep buying their gas? Why is Italy just now firing up coal plants and ordering LNG from the U.S.?
It's not okay. It's not okay from a moral point of view, and I think the U.S. is also buying Russian oil. And it's not okay from a strategic point of view, because the fact that Germany, for example, has had a huge multi-billion-dollar gas contract via Nord Stream 2 with Russia going on for years, has basically constantly weakened our strategy to contain and deter Vladimir Putin. So it's not okay, you're right. And I think hopefully some good can come out of this crisis, where the West will finally be honest with itself, sever the links it should sever, to really contain the problem, because we only have done it halfway. And Putin knows that and has been using that.
Well, Fabrice, on your point about halfway, and we heard this from Vladimir Zelensky in his overnight address as well, that sanctions have not convinced Russia. If sanctions aren't going to work, what, if anything, can the West do that will?
Well, we are not going to sanction military sequence. So the question to the West, which is really difficult, is whether we are willing to be part of a military pushback. That doesn't have to be U.S. or French or Spanish soldiers on Ukrainian soil, but it can be something broader, like maritime blockade in the Baltic and Black Sea, like cyber attacks, but at least some response that is coming to basically to help and watch Ukraine's back. For the moment, we're just sitting, claiming sanctions, making big statements, but we are not basically letting Putin lose his strategic advantage.
Does the West then risk allowing itself to walk into what's going to become a new world order if Putin's ultimate aim is a return to the Soviet Union?
Well, it's a new European order. That's pretty clear. And you are going to increasingly have two Europes, one free and open, the European Union, and the rest that is going to be under the Russian rule. And this is what we wanted to avoid, but we have never gone all the way to basically offering Ukraine, but also other countries, membership of the European Union and NATO. And Putin has been using that. Now he's gone all the way to basically put them under his boots.
Fabrice, is there a threat, any threat to NATO here? Using your experience of serving under two Secretaries General of NATO and working for them, advising them, is there a threat to NATO here? I mean, Ukraine, starkly, and the Ukrainians might feel disappointed about this, is not a NATO country. Other countries in Eastern Europe are, and that is different, and we heard that from the President of the United States yesterday. What should be the impact on NATO here?
The threat is still very remote to the Baltic states or Poland or Romania, but it's probably higher than it was a couple of days ago. And I think we have to be clear about that. And this is why NATO is going to amplify its territorial presence and defense on the NATO eastern flank. But frankly, I think the real threat is that if Ukraine goes down, it's going to have a major impact on stability in Europe. You are going to have refugee flows coming from Ukraine to Western Europe. So we should not keep ourselves in thinking Ukraine somehow can be kept at arm's length from the rest of Europe. Ukraine is part of Europe, and what happens there is going to impact us all. Even if we have US, German, French soldiers on the NATO border, it's not going to be enough to contain the Ukraine problem. So that's why we need to get there.
Fabrice, thank you very much. Fabrice Pothier, Chief Strategy Officer at Rasmussen Global. Thank you for your perspective. And we will be talking further about the possibility of those refugee flows in the next part of our program. Coming up, though, on Balance of Power later, U.S. Deputy National Security Advisor Dalip Singh. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Anna Edwards with us out of London. Now, Europe is bracing for what could be an exodus of more than 1 million refugees after Russia launched a full-scale attack on Ukraine. Joining us now to discuss is Patrick Donahue, Bloomberg European government editor in Berlin, and focused really on Eastern European economies. Patrick, what does this mean for Europe, considering the fact that the continent in some ways is still reeling from refugees that came from Syria?
Well, reeling, it depends on who you talk to. I think the continent, I mean, the European Union with a population of whatever is 500 million, is certainly able to absorb a large number of refugees. That was also proven in the 2015-2016 refugee crisis. It was primarily a crisis for Germany, where most of the migrants ended up, but it was a question of who wanted to take in migrants. And of course, back then, right, Eastern Europe almost steadfastly refused to take in migrants. And now you have another story, because if there's a refugee crisis on the back of a war in Ukraine, you're going to have more than a million refugees coming in, according to forecasts from European officials, different EU member states. And so you'll have a different picture for Eastern Europe.
Yeah, I didn't mean reeling necessarily economically. The last wave of refugees was absorbed well, but politically it was difficult for the last administration in Berlin, certainly, and for especially the peripheral countries, Italy and Greece. Are they willing to accept refugees this time?
You hear a different tune, yeah, from these Eastern European governments. This morning, Viktor Orban, the Hungarian prime minister, who's been a strident anti-immigration leader, he's made a name out of it, and he's heading into a difficult re-election in less than 6 weeks. He's exempted Ukrainian citizens from Hungary's fairly draconian asylum rules. I mean, rules that have been ruled illegal by the EU's top court. That kind of gives you an indication. Of course, Orban refused to accept mostly Muslim migrants 6 years ago during that crisis. And this time it's different when you're talking about Ukrainians.
Right, and what kind of reception then, if Ukrainians are on their way towards the European Union, Patrick, what kind of reception would they get, say, if they go towards the Polish border, which might be in their sights? And how quickly does this start to test the unity of the EU?
Yeah, well, I mean, the main picture for Ukrainian migrants coming out of war, basically, is a fleeing war, is that in the EU you have 4 border states to Ukraine. Most of refugees will probably go to Poland, where you have you already have a population of Ukrainians that's numbering between 1 and 2 million in Poland. They make up a large portion of the workforce there, and so the Polish government has been clear that they will accept migrants. So far, it's been a trickle comparatively. It's very early, but those numbers could grow depending on the level of violence.
They could grow. Patrick, thank you very much. Patrick Donahue with that important story from Berlin. More Bloomberg Surveillance is ahead. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
The company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
The most obvious impact of what we've seen in this escalation is just a rise in uncertainty.
We are going to have to deal with this friction with Russia right now.
Inflation shock, inflation dynamics is just getting intensified.
We could see oil prices moving closer to $120 to $125 and stay there.
Globally, it's stagflation, I guess, is the fear here.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning. With Tom Keene, Lisa Abramowitz, I'm Jonathan Farrow. Futures are down 0.6% on the S&P 500. Tom, the headline this morning, Russian forces closing in on Ukraine's capital.
We use the markets to monitor what's going on, but what's going on is a continuation of yesterday, John. I'm watching the movement from South Belarus down the Dnipro to Kiev and into Kiev right now by Russian forces. And, John, off the radar of the zeitgeist is the move west of Russian forces. That may be the theme for this Friday.
The elephant in the room for me, Tom, is just the flow of natural gas through Ukraine and into Europe. The data on the Bloomberg terminal as follows. Jumped 38% on Thursday. Today expected to increase by about 24%, Tom. That data from Ukraine's grid operator. That's the story. We're at war in Ukraine, Tom, but gas is still flowing from Russia through Ukraine into Europe.
That's the rush of today. You wonder where that'll be in a week, John. And I know the TZT has come off a little bit. The Dutch measurement of natural gas is not the explosive surge that we saw yesterday. John, in every war, there's profit. In every war, there's capitalism. Why should this be any different?
The quote that stood out for me from the administration came in a briefing late yesterday afternoon, Lisa. It read as follows. We're not going to do anything which causes an unintended disruption to the flow of energy as the global economic recovery is still underway. That was from Dilip Singh, the Deputy NEC Director. We'll be catching up with him. I believe David Weston is a little bit later this afternoon.
Well, and that really was the theme of President Biden's press conference when he was talking about how they want to minimize the pain for allies. This has been the theme. The key issue is, can they counteract Russia's aggression with means that don't inflict pain on some of the biggest economies? Can they do that right now? The markets are suggesting no.
Not through sanctions. That seems to be the conclusion from UBS, Tom. They think it's going to be pressure at home, political support at home in the event of this wider conflict that we're seeing play out.
Yeah, our job is not to do opinion here on sanctions, but very clearly, and I defer to Daniel Tannenbaum, who I believe joins us across surveillance today again with Oliver Wyman. And John, it's real simple. Sanctions get you only so far. We heard that from General Hodges yesterday.
Futures are down 0.7%. Let's whip through the price action for you. On the NASDAQ, we're down 0.6%. What a turnaround in yesterday's session. The S&P from negative 2.6% to positive 1.5%. 1.5. Tom, WTI yesterday from positive 9% to almost unchanged.
Yeah,
How much a factor was the sanctions story and the turnaround we saw late yesterday afternoon?
I think it was. The action was there, but I love Doug Cass's phrase that he uses, gamma shift. We're not going to go into the math of that right now, but basically, John, there's a massive and emotional bet one way, and you spring the other way off little news, and you go further on the spring than you expected. We springed yesterday afternoon.
Lisa, crude 92.71, negative just a tenth of 1%.
And a lot of people said it was directly tied to the sanctions, or what the sanctions did not do. All eyes, of course, on further developments today. I've been really notably remarkable. I find it remarkable that we've seen such incredible volatility. All right, here's what I'm watching today. 8:30 a.m., we get U.S. personal income and spending data for the month of January. Based on the retail sales data that we got earlier this month, the expectation is for an upside surprise. People are spending plenty, even with the inflation that's pushing prices up. This really brings me to another thing that really stood out yesterday, which was the Fed officials all talking about how this is not going to materially change their view on rate hikes unless something else comes to play. Chris Waller, a Federal Reserve governor, came out and said, with the economy at full employment and inflation far above target, we should signal that we are moving to neutral at a fast pace. A 50 basis point hike would help do that if data on jobs and prices stay hot in the coming weeks. Also, 9 a.m., these are going to be the series of meetings that we'll get a sense of how much more the sanctions will be going forward. We have the NATO Emergency Extraordinary Virtual Summit with Joe Biden and Jens Stoltenberg. And then ECB's Christine Lagarde speaks in a separate meeting with the Eurogroup, including the French finance minister, Bruno Le Maire. How much do we hear about further actions, and how much does the ECB go in the opposite direction from what we heard from the Fed yesterday? And 10 a.m., U.S. University of Michigan February sentiment survey. We saw that sentiment fall to the lowest levels going back to 2011. How will this be affected given the fact that gas prices probably aren't going to come down, even with some reserve releases and other additional measures? I mean, honestly, the volatility in oil prices will demand a premium, a lot of analysts expect going forward.
Did you see the line from Governor Waller, Tom? Shout out to Connor Sen of Bloomberg Opinion for this one. Quote, my daughter sent me a text. She said, Dad, the cost of living is out of control. Please do something. I think it was Luke Cower that said, I think he meant send me more money, not hike interest rates 50 basis points. But Tom, that's the conversation of the Fed. It seems to be lining up a move next month, regardless of what we're seeing play out in Europe.
They're data dependent, and John, I'm not going to mince words. Part of their data dependency is going to be the number of refugees over the border. We have to wait and see what that is.
Team coverage starts right now. Bloomberg's Emily Wilkins down in D.C., Maria Tadeo in Brussels. Maria, let's start with you. The agenda for today, what is it?
Well, we have to focus on NATO, and we have to focus about the sanctions that the Europeans agreed to yesterday, but we know the detail is still very much pending. And of course, Jonathan, the frustration from Zelensky in a speech that really has been stuck in my head for 12 hours now, when he came out yesterday and said, we need help now. There's been heavy fighting in Kyiv. I know I'm the #1 target for the Russians. They are coming, and we're staying put, but we can't do this by ourselves. We need the weapons. We're going to have to fight for every inch, but we need these weapons. And Jonathan, the tragedy of this country today, this morning, is that, of course, the Europeans right now, they play the long game. They bet on this slow burning economic meltdown in Russia, slow decline, but the Ukrainians will tell you it's too late. We need it now. So there's this huge gap between what one side says and what the other one needs.
Maria, Estonia, just out, of course, to the north and the northest of the Baltic states, says it will send more Javelin rockets to Ukraine. Thank you, Martin Marietta, among others, for that U.S. design. That's great, except as you well know, the soldiers have moved south from Belarus. They are in the outskirts or even into Kyiv right now. Explain the threat to Mr. Zelensky at this moment.
They are moving into Kyiv, and that is a big problem. This is a capital which, of course, as you know, has huge propaganda victory for Vladimir Putin. If he can say in 24 hours we were able to get to the capital and change the government. The Ukrainians also know, and this is the information that we have from the government, that this could be a very tricky situation for Zelensky. He says, I am not going to leave. This is my house. This is my people, and I'm not going to leave. But the Russians have made it clear they don't want him in power, and he's going to have to go. So again, this could get very delicate. I don't want to speculate, but of course you can see why it's going to be 24 hours very dire from the Ukrainian president, who yesterday, by the way, in full military gear, he still said we got to defend our city with everything that we have, every inch. Anyone that wants to get a weapon and can operate a weapon will get one. So this is not going to be easy for Russia. In fact, we're expecting a lot of almost guerrilla style fighting in the Ukrainian capital. So this is not going to be easy. What the Ukrainians say is that they expect another very difficult 48 hours, but they want to defend the city.
Emily, in the difficult and delicate TikTok that we see happening right now in Ukraine, over in the U.S., we saw President Biden answer a number of questions. Two questions that he didn't answer yesterday at his press conference that really stood out to me. One, how willing is China to work with the U.S. to try to isolate Russia? And two, why the U.S. did not impose direct sanctions on Putin? Have we gotten any color on any of those two questions?
Well, I think those are things that we're going to see developing in the next upcoming days and weeks. I mean, one thing I think right now that's going to be very interesting to watch is what Biden's own party is going to do when those lawmakers get back to D.C. next week. You saw yesterday the head Democrat on the Foreign Relations Committee, Senator Bob Menendez, put out a statement saying that the sanctions that Biden had imposed were good, but they can and should go further. And he called for sanctioning Putin. He called for sanctioning Russia's energy economy. He has called for additional sanctions, including removing Russian banks from the SWIFT payment system. And he's not the only one. We're hearing similar calls from other top Democrats in Congress. And so they were working on that sanctions package before they took their scheduled break this week. There is certainly a desire to continue to work on that, continue to find a path forward, because you're hearing from both Democrats and Republicans that they don't think that the Biden sanctions have gone far enough yet.
Emily, what are we expecting in terms of energy policy and what we expect to hear in the next couple of hours from the Biden administration?
Well, so far, President Biden has defended the fact that they haven't put sanctions on Russia's energy industry. They say that the world is recovering. There's a global recovery going on right now. They don't want to hinder that. That's very similar to what we're hearing right now for why they're not sanctioning aluminum, another big Russian product. I think to a certain extent, Biden knows that high gas prices in the U.S. are an issue. He has already warned the American people last week that this conflict could mean higher gas prices. And I think we're looking at the White House to see what, if anything, they do to try to make sure that gas prices don't rise any higher for Americans, as they already deal with a very high inflation.
Emily Wilkins, thank you. Down in D.C. alongside Maria Tadeo over in Brussels. Maria, stay close. We'll catch up with you through the next couple of hours, no doubt about that. The Turkish leader on the wire right now, Tom, speaking at the moment, saying NATO should have taken more decisive action. Speaking in Istanbul, of course, says the West has only offered advice to Ukraine so far.
This is loaded, John. Bobby Ghosh of Bloomberg Opinion has a spectacular essay out on Mr. Erdogan's many choices here. Just a really must-read for anybody who cares about this. I'll get that out on Twitter. And it starts with the Bosphorus Strait, John, but it has much more to do with export and import led by the massive tourist flow from Russia to Turkey. They're literally beholden to that, just as one idea of the decision tree Mr. Erdogan has.
We'll hear from leadership around the world, no doubt, through this morning.
Yes.
I'm bringing the headlines with futures down about 0.9% on the S&P. Lisa, this came from Bank of America's Michael Hartner this morning. The percentage of stocks in a bear market, 76% of the NASDAQ, 51% of the S&P 500.
Yeah, although he also went on to say that just because it's a bear market doesn't mean that you should buy, and that actually you should sell the rips, right? I believe that was his phrase. So, there's a real bifurcation between those who see an opportunity and those who see further risk as we weigh these sanctions.
He said, sell the rips, Fed tightening into a crash and stagflation. Lisa Bramberts, Tom Keene, Jonathan Ferro. We're down 0.9% on the S&P. On the NASDAQ 100, down 0.8%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishka Gupta. Russian troops, tanks and aircraft are pushing closer to Ukraine's capital, Kiev. Explosions were heard before dawn in the city and gunfire was reported in several areas. Still, Ukraine's President Zelensky said his military had stopped Russia from achieving its objectives the first day of the invasion. Meanwhile, President Biden ramped up sanctions on Russia. He's targeting the country's largest bank as well as a number of the country's elites and their families. And EU leaders have backed the outlines of a plan to limit Russia's access to Europe's financial sector. Sanctions would also restrict key technologies. Final details are expected to be formally adopted today. And the price of oil moved higher on concern that the fighting in Ukraine may impede shipments. Still, it was relatively calm in the market after a wild session Thursday. At one point, Brent crude soared more than 9%. The benchmark is still trading around $100 a barrel. And Federal Reserve officials are sticking to their resolve to raise interest rates next month. That's despite the uncertainty caused by the Russian invasion of Ukraine. Central bankers are stressing the need to find the hottest U.S. inflation in 40 years. Fed Governor Christopher Waller says a half percentage point hike is possible if data on jobs and prices stay hot. And in other news, Bloomberg's learned that President Biden has decided on a nominee for a seat on the Supreme Court. No word on who it is or when the selection will be announced. The president has already said he would select a black woman. That would fulfill a promise he made during the 2020 campaign. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Much larger ambitions in Ukraine. He wants to, in fact, reestablish the former Soviet Union. Our forces are not and will not be engaged in the conflict with Russia in Ukraine. Our forces are not going to Europe to fight in Ukraine.
The President of the United States from New York City. This is Bloomberg, with futures down 0.9% on the S&P. On the Nasdaq, we're -2. By 114, we're down by 0.8% here. Into the bond market, yields come lower just a little bit by a basis point to 195.30. The Fed speak still teeing up a move next month. Governor Waller teeing up perhaps 50 basis points, still a part of the conversation. In the commodity market, we're down about 0.5%, Tom. Just a massive swing yesterday. At 1 point positive after being up 9%. We were down almost at 1% at one point, Tom. Just unreal, that turnaround in crude and in equities yesterday too.
And a real yield with a little bit of a bounce. But John, as you go to your program this afternoon, the 10-year real yield gets my attention. I want to draw your attention. Well, I think we just lost it, actually. We had a shot of Independence Square in Kyiv, and this is really important, folks. This is what I'll be watching through the morning. John, this is the emotional lodestone for the people of Ukraine. The tower is very recent. It's only 10, 15 years old, Independence Monument. But this in 1919 was Soviet Square. And then with the USSR, it was October Revolution Square. And with immense pride, it was Independence Square. John, you wonder where that square will be, what it will look like in 6 hours.
It's an emotional, painful moment for the people of that country, Tom. We reflected on the emergency UN Security Council meeting that took place a couple of nights ago, and observed the fact that China's ambassador was the only one not to criticize Russia. Just seeing a headline right now, reportedly from CCTV, saying that China's Xi and Putin will talk over the phone, Tom, Friday afternoon. Just seeing that headline right now.
We'll have to watch that. And of course, renminbi has been quite stable here, even with some strength. Yuan 6.32. John, on the liquidity of the financial system of Europe, we have the right guest.
Let's get to Tony Crescenzi, market strategist and portfolio manager at PIMCO. Tony, what I'd love straight off the bat is just your observations in the last 24 hours, how the market's been functioning, what you've been seeing.
It does seem investors are doing what they often do, which is take a leap of faith. In fact, all of the debt that exists in the world exists in part because of that leap of faith. Investors have to have confidence in cash flows, whether it be to bond investors, to equity investors, be it dividends, buybacks, etc. Seems they're retaining that. And we know that over time, human beings, generally speaking, show a remarkable ability to adapt. That's the phrase, keep calm and carry on, is a phrase you, of course, attributed to England in World War II, and Winston Churchill is a feeling that investors tend to have. And so it's not a shock that the echoes from recent inflation data at the Fed, at least, are louder than the rumblings in Ukraine. It's a sad state of affairs, but it is finance and the way things are.
Tony, just right now, in the here and now, there is an issue that things are moving so quickly that sometime parts of the markets actually do break, and people are looking for potential nodes of contagion, particularly in money markets with the Russian sanctions on particular oligarchs, particularly with a flight to cash amid all the uncertainty. Have you seen any signs of that? Are you looking for that as we do see all of these developments really evolving in real time?
There remains ample financial liquidity in the global financial system, clearly in Europe, also Asia, and of course the United States. The easiest gauge to look at is the repo, overnight transactions, the exchange that occurs between two parties, between securities and cash. That's still extraordinarily low, reflecting the surfeit of money that exists in the system. And even if there were some tightening of conditions in that realm, we would expect the central banks to do what they always do, which is rev up printing presses.
Yeah.
And they've certainly shown a remarkable ability to do that in the last decade or so.
So perhaps liquidity is consistent or at least ample. However, there has been a huge divergence right now going between the U.S. and Europe with respect to what the impact from the Ukrainian conflict could be. We just get this headline that the ECB's lane sees the Ukrainian war shaving up to 0.4% from the 2022 GDP. This is according to Reuters. How much have you shifted your view on how quickly the ECB could move versus the Federal Reserve?
On the margin, we think that the stress of course, increases the downside risk to global economic growth. PIMCO will hold a quarterly meeting in about a week and a half in Newport Beach and around the world via video with its investment professionals to discuss the matter. But we currently have penciled in the growth rate of in the mid-3s or so for the U.S. this year and close to 4, somewhere in the high 3s for Europe. The downside risk, of course, emerges from a drop in confidence in Europe more than it would be in the United States, and the impact of energy costs, which is greater in Europe than it will be in the United States. And so there is some impact there, but it's probably too soon to say that the numbers will come down. And importantly, looking at the two-year story, one should remain sanguine right now with a high degree of caution about the predictability of that, though, with respect to the global outlook. And that's what markets seem to be reflecting with the current information it has. Things could change very rapidly. And so we'd say about the outlook, there's a high degree of uncertainty. And so one wants to have portfolios that are liquid, resilient, and agile in this climate.
Does that mean more cash, Tony?
A little more cash, not to say sell everything, of course. We think right now just simply maintaining flexibility. This might mean choosing more liquid assets, but staying invested, but simply choosing more liquid assets. For example, in the credit markets, an institutional investor could choose a credit index rather than cash instruments because the amount of money on the bid and offer, so-called quote depth, tends to be rather large in comparison.
Tony, always wonderful to catch up with you. Important moment to get your thoughts.
John.
Thank you, sir. Tony Crescenzi of PIMCO. You would have noticed the headline that came out on the sports pages this morning, Tom, but I think they're relevant, that Paris will host the Champions League final. It's been stripped from Russia, from St. Petersburg. The reason I think this is important, Tom, is because the accusation has been leveled at sporting organizations for the last, I don't know how many decades now, that they've allowed autocratic regimes to legitimize themselves by allowing them to host events like these. The Olympics, Formula One, there's still an F1 race that needs to be decided. Will it take place in Russia? And these football finals as well, Tom.
Let's digress here, John. I think it's important, particularly with your serious knowledge of this. I mean, London is the conduit, and I make jokes about it, except it's not funny. What does Chelsea do? What does Mr. Abramovich do?
There have been calls to sanction him, Tom. So what they do, I don't know. I'm not privy to those conversations.
Please, of course.
But you can see it in the reports quite widely that there are some people in the UK asking for that to happen, Tom.
I mean, I wonder where the tranches of sanctions, where we finally click in.
Are we still in the tranches, Tom?
Involved.
I mean, is there more to come?
I believe based to Mr. Johnson's clarity, he has said, no, this is it, let's go. And others are saying they're very tranche dependent.
Seems to be the Europeans just holding back a little still. Tom Keane, Lisa Bramis and Jonathan Ferro. Futures down 0.9%. This is Bloomberg.
the Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Key feature of the price action in the last 24 hours, just the wild swings that we've seen. The S&P 500 at one point yesterday, negative 2.6% of the close, positive almost 1.5% this morning. We're down 0.8% on the S&P. On the Nasdaq, we're down 0.6. Same story in the commodity market as well. That's equity switch on the board and get to the commodity market. We can talk about WTI, 92.20 right now. At one point yesterday, it was up by 9%. Then it was negative 0.7% and finished just about positive. We're down 0.7% today at 92.21. So what is this a measure of? Jim Bianco of Bianco Research talked about this a little bit earlier in the week. This is arguably a measure of the West's appetite to compromise their own economy in an effort to compromise Vladimir Putin's. Just how big is that appetite? And for me yesterday, Tom, the administration said the quiet bit out loud. They just said it. We don't want to compromise the flow of energy at a time when the global economy is recovering. That is why we've had a bit of a turnaround in crude. And TK, you can just see the data in Ukraine. We're writing about it on the Bloomberg. Looking at the data coming out of Ukraine, the gas flowing through Ukraine into Europe is picking up yesterday, set to pick up again today.
Yeah, I mean, there's no question about it. And I saw a Bloomberg chart showing the maritime at the Sea of Azov as well, John. And the disruption there is not only the pipelines, but also the disruption of delivery of commodities and hydrocarbons across the Black Sea as well.
So we've done stocks, we've done commodities. Let's talk about bonds, 2s, 10s, and 30s. And sit on 2s like we have been doing very recently, 157.97. Lisa, you and I have gone through the Fed speak. Not sure what Tom was doing yesterday evening, but certainly not going through the Fed speak.
Got that right.
Governor Waller teeing up a 50 basis point move potentially next month. You just get the feeling not much has changed for the Fed at this point. It still remains to be seen, and we're still in between that range, 150 out to 160-ish at 158 at the moment.
Frankly, I was surprised yesterday that the knee-jerk reaction was that the Fed might get more dovish to this. They are dealing with inflation that's running at the hottest pace going back to the early 1980s, and that is their priority right now. And anything in Ukraine, it will only potentially exacerbate that inflationary impulse.
Can I throw in something as well, Lisa, that I know you will have looked at this morning too? Not on the radar should be. China.
Yeah.
Vowing to boost economic support for the economy. Got to be thinking about that as well. I know, Rick Reeder of BlackRock would always say we're always obsessed with the shark closest to the boat, and you know what the shark closest to the boat right now is. But just out there, off the radar at the moment, is a Chinese effort to stimulate its economy, Lisa, that we cannot take our eye off.
Well, yeah, because they've actually added the most stimulus to their economy in a couple of years in this past week. But more importantly, they may hold the key to a quicker resolve of the Russia-Ukrainian conflict. We did just get headlines that Xi Jinping and Vladimir Putin were having a phone call. How much does this actually percolate into something where Russia either gets support from Xi Jinping or the opposite?
2s right now, 158, Tom. 10s. at about 196.
Very good. Let us continue here, and this could be a 2-hour conversation on surveillance. We don't have time for that this morning, and neither does Dan Kurtz-Phelan. He is editor at Foreign Affairs magazine, which barely describes what he's done on China. Again, I can't say enough. Get a subscription of Foreign Affairs magazine and use their website. Dan, you people have been going 24/7, and I want to congratulate you on the essay of Douglas London, ex-CIA, with a piercing essay of what's next. Tell us what Douglas London says about Mr. Putin and Kyiv.
That's right. This is a great piece by someone who's been involved in these kinds of challenges from the U.S. perspective in a long career in the CIA. And what Doug London looks at is, one of the ways in which this could prove to be a much more complicated victory for Vladimir Putin than some of the triumphalist scenes that you might get from the Kremlin suggest. In this case, it's really about the kind of insurgency that they could see in Ukraine if there is a full takeover of the country, as we see in these days. And Doug London and many others who have been in the U.S. national security apparatus know very well how challenging it is to address that kind of insurgency, even when you have the kind of overwhelming firepower that brings a military victory very quickly. You've talked about, the other ways in which this is a much more complicated outcome for Putin than the earlier results might suggest. There was the relationship with China is going to be complicated. The domestic opposition at home, obviously the effect on the Russian economy is quite significant. So even as we see the scenes in Kyiv this morning of Russian troops coming into the city, the longer-term ramifications are much more complicated, and this coming insurgency in Ukraine, as Doug London predicts, is just one of those.
Right. Dan, we've done our best to keep up with Foreign Affairs magazine, conversations with Angela Sten of Georgetown and Brookings, a piercing conversation with General Hodges and his infantry experience across Europe. Here's the headline, folks. Ukraine Zelensky calls for negotiations with Putin. Based on your Council of Foreign Relations resources, will Mr. Putin, quote, negotiate, unquote?
So there's been no sign through this whole slow-running crisis that Putin is satisfied with anything less than maximalist demands. You had the U.S. government saying this really from last fall, that Putin had the most extreme, most maximalist objectives you could think of when it came to Ukraine. And there were lots of us who were people on our pages, people elsewhere, who were trying to think through this from Putin's perspective. And a lot of this didn't look rational, right? There were reasons why negotiation, accepting some type of half victory seemed to be much more sensible from his perspective. And that led a lot of people to argue that he was bluffing. And in fact, those predictions that he was going for all of it, going for everything, proved to be much more prescient. I think one of the really fascinating dimensions here, and this bears on China and what's happening with Xi Jinping now as well, is we just really don't know what the world looks like through Vladimir Putin's eyes. He's been incredibly isolated for these last couple of years. He's had very little contact with the outside world. We've seen these shots of the kinds of meetings he has. And that just means the picture could look much, much different from the way we imagine it. We ran a great piece a few weeks ago by a couple of political scientists called The Bully in the Bubble. And they talked about just how dangerous it is when you have this kind of isolation among leaders, especially these kind of strongman leaders who have really an incredible amount of control. We see the same thing with Xi Jinping. So we can imagine what would seem rational to us from the perspective of one of these leaders, but it's much harder when you don't have the kind of interaction that you would have had in normal times, or the kind of interaction you have with leaders in other kinds of societies.
Dan, if the West is dealing with an irrational figure here, which is what you're suggesting, then does Xi Jinping really hold the only key to some quick resolution, and that sanctions really won't have the logical consequences because of that lack of rationality?
Sorry, we can already see that sanctions have failed to deter this kind of action. The U.S. was pretty public in describing the kinds of sanctions that you would get. It worked very hard, as you all have been discussing today, to bring the Europeans on board in ways that I think would have surprised some analysts a few weeks ago if you told them the steps the Europeans would take. That has failed to deter Putin in taking these steps. It's very hard when you have a leader who is set on this kind of action to use sanctions to deter it. What this does do is suggest that there will be a cost to this kind of action for other leaders who may be thinking of it. And certainly Xi Jinping is one of those leaders that that American policymakers and European policymakers have in mind when they think about the need to impose costs. So there's obviously lots of speculation right now about how Chinese policymakers are what they're taking away from what's happening in Ukraine when it comes to Taiwan and other potential actions in East Asia. And what you see the U.S. government and European governments trying to suggest is that the costs of this are going to be kind of high, are going to be quite high. So even if militarily this is something that is possible, it may not be advisable if you're a Chinese Communist Party leader who's thinking about all these other concerns and slowing economic growth and the need to maintain some degree of legitimacy with your own population.
And Dan, this is the headline that we just have been receiving, that according to Chinese state TV, China is urging Russia and Ukraine to negotiate. Hard to tell exactly how hard they're pressing on some resolution to this. Do you have a sense of how closely aligned Russia and China really are versus just a marriage of convenience?
So they've been converging in lots of ways that would have surprised observers 5 or 10 years ago, because there are so many reasons why you expect natural tensions to crop up between these two countries. We're marking 50 years this week since President Nixon's visit to China, the opening to China, which really marked the divergence of the Soviet Union and China after a period in which they had been much more aligned. So you do have a lot of those natural geographic and economic tensions there. But at the same time, there is, as you say, a real marriage of convenience, a shared interest in disrupting the U.S.-led order and undermining U.S. alliances and really kind of changing the way the international system works. So as long as the two see common objectives in that regard, you'll expect them to work together. But we also really see a lot of, I think, anxiety in Beijing about what this means. They don't want to create this norm of territorial sovereignty being violated. They talk about sovereignty all the time, and this cuts against it. They don't want to live in a world in which they're in a kind of economically isolated bloc with only allies like Russia and North Korea and Iran. So this is, I think, has been much more complicated than the narrative of a kind of easy win for the Chinese, which it would suggest.
Hey, Dan, thank you. Dan Kurtzfehlen of Foreign Affairs magazine. It's a whole new world at the moment, and companies have got to start to adjust to that new world, the banks in particular. So let's talk about the banks. Credit Suisse joining UBS and cutting lending against Russian debt, also giving zero lending value to some Russian bonds. Yeah. So that does not mean that Russian bonds per se are valueless. What this ultimately means, Tom, this is about using them as collateral to get lending from, say, UBS and Credit Suisse, and some of them, according to the Swiss bank, zero lending value for some of those Russian bonds.
This will be worked out, John. And again, to me, and it's very traditional, and I stand corrected, John, if I'm wrong, but I thought of this last night, and the nexus between London and Zurich is critical here in terms of finance. And it's not the stereotypes of the gnomes of Zurich and all that. It's about just what you say. I've got assets, in this case, maybe petroleum, whatever it is, maybe it's wheat, and I want to borrow money against them for whatever reason. It's not going to happen.
At least you've got to go through this piece by piece, and all these banks trying to work out what it means for them.
Exactly. And trying to basically have those margin calls now before things get more volatile, and as they piece together what the path of sanctions ahead will be.
Lisa Bramberts, Tom Keene, Jonathan Ferro. Futures down 0.5% on S&P. A big recovery in European equities underway too. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ruchika Gupta. Russian forces are closing in on Ukraine's capital, and its embattled leadership. This morning, sirens warned residents of Kiev to take shelter. Ukraine's military says its units were fighting Russian tanks to the north. Meanwhile, Russia's President Vladimir Putin is shrugging off new sanctions imposed by the US and Europe. He spoke today with China's Xi Jinping, who supports negotiation with Ukraine. For now, the Biden administration is holding off on sanctions that could disrupt global aluminum supplies. Bloomberg's learned that White House officials met with industry representatives in recent weeks and told them that there was no plan to target Russian aluminum. Prices retreated from record highs after Bloomberg reported those talks. And Morgan Stanley has disclosed that U.S. regulators and prosecutors are investigating various aspects of its block trading business. A regulatory filing admitted that the bank itself is under scrutiny. Authorities are digging into how bankers and money managers carry out stock transactions big enough to move prices. And fallout from Russia's invasion of Ukraine has now reached the highest levels of soccer. Russia's been stripped of hosting the Champions League final May 28th in St. Petersburg. The men's final will now be played in Paris. Plus, Russian and Ukrainian clubs and national teams in European competitions will now have to play at neutral sites. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We've intentionally scoped our sanctions to deliver severe impact on the Russian economy while minimizing the cost to the U.S. as well as our allies and partners. To be clear, our sanctions are not designed to cause any disruption to the current flow of energy from Russia to the world.
That quote from Dileep Singh, stunning. The US Deputy National Security Advisor. Will be catching up with him a little bit later this afternoon. Futures are lower this morning. We're down 0.9% on the S&P. On the Nasdaq, we're down by 0.7. In the commodity market, crude 92.20, down about 0.7% here, Tom. That line, I went through that briefing yesterday, Tom. I watched the whole thing, and I went through the whole thing when it was published online too. This is the line. When it comes to energy, this is the one area where Russia has systemic importance in the global economy. Russia depends on these revenues just as much as the world needs its energy.
Well,
but we're not going to do anything which causes an unintended disruption to the flow of energy.
This sounds like Joe Biden and classic Joe Biden. It's simple, John. He doesn't have the votes. There's enough votes in Europe to say no to any idea of linking sanctions into oil deliveries. The same thing, John, frankly, to watch is with wheat, with a real focus on wheat is the usage of Russian wheat by North Africa and by the African continent. It's the same thing. There's market realities here that would cause massive disruption.
Tom, did you see what Draghi said this morning?
I missed
Italy
that.
could
Please.
reopen coal plants amid the crisis in Ukraine. He said we'll seek to boost LNG imports from the United States.
Well, that you wonder where that's coming from, and if we have a sustained price here, maybe it works out. Why don't we move on right now? Quiet in the headlines. Let's monitor the headlines here again and again. We're looking at Independence Square in the afternoon and Kyiv as well. The Russians moving south and into Kyiv is the reports right now. Paul Sankey is a name that you may not know. He is absolutely definitive in oil. There was a time and place long ago at Deutsche Bank with Adam Szymanski where they were the definitive read on hydrocarbons. He is aged at Mizuho and now at Sankey Research, and we're thrilled that the acuity of Paul Sankey could be with us this morning. Paul, I would wait to see your supply and demand dynamics of Russia that came off the Szymanski-Sankey desk. What right now are the supply and demand dynamics of Russian oil that we need to focus on?
Well, that Europe is buying more Ukrainian gas this morning than it was 2 days ago because of the way the contracts are structured. So actually, European buyers were actually holding back into the invasion in order to actually, as now that they've got the news, you know, buy the rumor, sell the news, sell the rumor, buy the news, they're actually going to nominate more gas through Ukraine, which is incredible. And, you know, I was looking at it and thinking, how on earth are these pipelines still running? You know, why wasn't Ukraine shut them down? And it's a little bit difficult to establish exactly how come they're still open. But the fact of the matter is, Russian gas through Ukraine is still being delivered to Europe. And it, as you know, is a hugely important part of the balance.
What is the weapon that the Allies have to stop the cash flow to Mr. Putin from hydrocarbons?
Well, they could cut off the hydrocarbons and say, we don't want your hydrocarbons, but they can't do that. And so all the sanctions, for example, you've mentioned the SWIFT issue, you know, the Germans say, don't do that because you're going to cut off our energy. And as you know, European energy policy has been completely misguided, essentially. And as a result, you know, Europe is powerless. And this was the hardest thing about working out what Putin would do, was to know that, you know, number one, Europe was so dependent on Russian energy and couldn't cut it off. And number two, the quality of European and arguably US political capital is so low, you know, that you just don't have strong politicians. So Putin, you know, did what Putin did. I mean, I think he made a terrible mistake, but it was an irresistible opportunity for him.
Well, we've heard a lot of stories about Europe trying to find sources of oil in other places, sources of gas in other places, aided by the United States. How substantial have those efforts really been?
Well, have you heard of the United States? I mean, we have, you know,
never heard of it.
We have the Marcellus. We're going to become the biggest gas exporter, natural gas exporter. Shell said this on Monday. U.S. will become the biggest natural gas exporter in the world this year. You know, which is stunning. We weren't exporting any natural gas 7 years ago. Unbelievable performance from U.S. oil and gas industry. And Europe, stumbled into this. What's really egregious about the European thing is obviously shutting down nuclear. I understand building wind, I understand carbon tax, but shutting down nuclear just makes no sense. And what you've done is you've left yourself absolutely exposed to Putin. And, look what happened.
Well, but Paul, in the here and now and what they can do in the next couple of months, aside from changing policy, which will take a lot longer in terms of nuclear energy, how much can the U.S. really boost their supplies of gas in order to export to Europe at a time when there has been a disinvestment in a lot of these plants?
Well, guess how many LNG regas terminals the Germans have? 0. It's like, what? It's incredible, and even just to get LNG into Germany is not possible. They're dependent on their neighbors. There is a lot of excess LNG regas capacity in Europe, but guess what? The global LNG is not drum tight. It's massively undersupplied. China can't get enough, so China's burning more coal. One of the interesting things that Tom will be interested by is that we're in an energy regression. I don't know what people are talking about, an energy transition. We've been going backwards fast. We're going to get all-time record coal demand this year globally, and the fact is that this is not an energy transition.
You see that line from Draghi this morning too, Paul. I read it out loud. It got my attention too. They could reopen the coal plants. I just wonder, from your perspective, how difficult is it to be short crude at the moment, Paul? Is that a trade that you'd be brave enough to make?
You're mocking me, Mark. I know you are. Hey, look, I thought Putin was just going to take the East, and I thought it was a great opportunity to short crude. Sure, underwater $8 later. So just to explain to who's listening, the listeners, on Tuesday, I thought that Putin was essentially just going to do an eastern existing territory grab, and it was a good opportunity to short crude. Obviously, that was a bad call. But actually, Mark, what I would say to you is that, John, sorry, what's happened is
That's okay, Mark.
No, that was just payback.
That's fine.
That was just payback. That was payback.
No, my friend Mark Farrow is the market maker at JP Morgan in oil. So
he's my cousin.
For me. Yeah, it is the same surname. So, what's happened actually is crude hasn't gone up as much as you might have thought, right? So the market, obviously, if you look at the crude chart, you can see that obviously this was discounted as an outcome. And actually, I'm still thinking that it is